Good afternoon, guten Tag, bonjour, and a warm welcome to the 7th edition of the CV Summit and the biggest edition of the CV Summit. It's great to see our live audience. You're still coming in, so do sit down. I know we have a full house here. And of course, also welcome to all of our online viewers joining us from all over the world. And what a magical place for us to get gathered here today at the Theatre Casino here in Zug, with amazing architecture and a view over the lake. And I heard that a lot of who are here are sort of the crème de la crème of Zug and the crypto valley. We have most of the CEOs from the corporate companies here. We also have representation from the government, federal and local. We also have startup founders, CEO from institutions, and of course also students. And having been in Zug for a couple of days now, I realized that this is not just a place. This is also a mindset that is leveraged by really strong, mature actors and also really passionate and driven startups. So my name is Sabine von Jafke, and it is truly a pleasure for me to be able to be here today and facilitate us through these 2 days. Now, I actually met CV Labs when I was in the World Economic Forum in Davos, and I was thrilled when they asked me if I'd like to come and to host the CV Summit. So a brief introduction to me. I'm born in Sweden, bred in London, lived across the world. I have a multifaceted career, successful moderator, speaker, TV host, communication catalyst, and also a driven entrepreneur. I'm in the Web3 space as one of the founding members, or team members at least, of a Web3 project that's based on the blockchain, an NFT strategy game called Planet IX. We've taken a virtual copy of the world, turned it into 1.6 billion pics that are NFTs, and it's all about sustainability, really creating a new flourishing planet and creating revenue for NGOs and impact-driven companies around the world, in addition to being a trading game. So CV Summit 2022 is about taking a closer look at where blockchain is and also what it has accomplished to date, and see the ways that we're working with this technology, see the ways that it's interacting, that it's creating trust, and also, of course, transactions. And also really narrowing down into the scalability and utility. So no longer really just looking at speculations, but really understanding that we're actually acting more and more with this, I would say, technology of the century. And we truly have a brilliant lineup of speakers and topics today. These 2 days will give all of you here and also you online really up close and personal meetings with leaders in this industry, leaders who are also, leapfrogging with groundbreaking achievements in all the sectors of Web 2, Web 3, institutional adoption, NFTs, metaverse, CBDCs, and all of this that we'll be diving into today. Now, there is a quote, I think it's Yuval Noah Harari who said it, that I really like, and he said, "In a world deluded by irrelevant information, clarity is power." So this is what we also hope that these 2 days will give you, clarity. Clarity of where we are, clarity of where we're going, and clarity of how we can accomplish it. But of course, also we want you to have an amazing time, a fun time, and who knows, maybe even a mind-blowing time. So in addition to all the things that will be happening here on stage, we've also made sure that this is a mind-blowing experience, transitioning you into the metaverse, not least. So outside, one stairs up, we have an NFT gallery, not to be missed. I know that it's showcasing some amazing pieces, even a diamond worth 500,000 Swiss francs, statues from Jani Lennonen's 7 Deadly Sins collection, and other NFT artists will be there from Wendy Yu, Dirk Coy, and Philip Scharer. And behind the NFT gallery, we have the metaverse. So really go there to, really understand and feel this multi-sensory, immersive world that we'll also be talking about here on stage. We also have the partner and Web3 Talent Hub, which of course is interesting for all of you who might be looking to work within this space. And we have the Startup Zone, so please go there to meet and greet with all the amazing startup founders. And then we have the meeting lounge. So there's one behind us here, there's one up by the terrace, and then there's one in the general area. And I wanted to check, have you all downloaded the app Brella? You're allowed to say yes or no, have you? No, okay. Well, if you haven't, do that, because what Brella is, it's an app, I think you got it with your invites. If not else, all over, here at the casino, we have QR codes. And for you online, I'm sure we can send the link in the app, in your chat. But Brella is what you use to be able to book meetings, reach out to people who you find interesting, and really seize this opportunity. And then you can take the meetings in the different lounges on the terrace, whatever you sort of prefer. So just to give you an overall view, we're going to have 90 minutes on stage for the first section. Then it's a 1-hour break, so you really have time to immerse yourself in everything. Then back for section 2, 90 minutes, then a 1-hour break, then back for section 3, 90 minutes, and then it's networking and mingle, apero, I think you call it in Swiss, aperitivo, and a VIP dinner for those who are invited. So, with that, I think it's time to kick off CV Summit 2022. And who better to do that than the CEO and founder of CV VC, who of course is the initiator together with CV Labs of CV Summit. Now, I know that many of you are sort of already acquainted with Mathias, who is the CEO and founder of CV VC. However, I want to give him, an introduction, because it's really amazing what he and his team are doing and contributing to the blockchain ecosystem here. I mean, they're such a driving force, and as founder and CEO, Mathias manages a portfolio of 50 startup investments, several blockchain co-working hubs around the globe, also publishing blockchain industry reports, and also, of course, doing all of this together with a growing team around the world. If you didn't know, Mathias is also the co-founder of the Swiss Blockchain Federation and leads the internationalization of Switzerland's expertise. And according to the business magazine Bilanz, he is one of the most influential people in the sector. So I would say it's no exaggeration that Mathias and his team really are a big influence when it comes to the blockchain ecosystem. So with no more further ado, please give a big round of applause for Mathias Ruch! Mathias, the thing is, I know that you don't really like to be, showcased that much on stage, but it is really, especially for me coming, first time to Zug, really apparent how much you and CVVC and all the team are doing for the ecosystem. And also now we're here, soon full house, also an engaged audience online. So maybe this is a sports-related question, but still, how does it feel?
Thank you so much, Sabine. Well, I feel great, I have to say. I mean, I'm very happy, to open this 7th edition of the summit already. And I'm also proud, proud of our team that kicked everything off. I'm very happy that you all come here. This is what makes CV Summit happen, and I'm also very proud of the partners that we have.
Yeah, definitely. And if we look, okay, technology is, growing with exponential speed. Blockchain is really, transitioning into the technology we're utilizing, and CV Summit is the largest edition to date. So if you would cherry pick what has sort of evolved within the industry and with CV Summit, what would you say is significant for this year?
You mentioned clarity before, if I'm not mistaken, right? So I think the space is maturing, and I think we can see that everywhere. At least I didn't see any Lamborghinis parked out front.
No? Sure.
Have you? I don't know. No, but traditional venture capital is entering this space. If you look at the partner lineup that we have this year here for CV Summit, it's the Web3 representatives, the CertiK, PraSaga, Web3 Foundation, and on the other hand, new partners like Google, Citibank. This really validates our industry.
And I know when I sort of look through the agenda, one could say that this is also about showcasing utility over speculation that maybe was before. Just, a bit of explanation what we're trying to convey with that.
Well, the situation, I think we're in a market consolidation situation right now. This situation or this phase reminds me very much of 2018, the crypto entry in 2018, when we started investing, actually. And this is a perfect timing, You have the players that remain in the space, they're here for the long run. You know, they want to create something that is here to stand. Valuations are back to normal. So for us as investors, to continue our investment approach is the perfect timing, and we have a great team that can execute on that.
I just wanted to see, because now we're sort of filling up, just out of interest, how many here are from sort of institutions? Yeah, there's a few. How many are startup founders? More. How many are from the government? Not that many yet. And from the big corporations? Yeah, so it is a good mix that we thought, and it's relevant for sort of all pieces of the pie. So speaking about team, why is teamwork and collaboration so essential?
Well, you know, when you ask investors, what's the most important thing that you look at for a startup? I think it's always team. That's the standard answer, but it's actually true. You know, you need a team that can pivot, a team that can take hard decisions, and I'm really blessed with the best team there is.
Definitely. Would you like to meet the management team? Can I call 3 of them up on stage? Would that be good? Let's call them up on stage. So we have Florian Kohler, who is chairman for CV Labs, and Olof Hanneman, CIO, and Ruth Salvesberg, CFO. Welcome up on stage. It's always nice to see, you know, the faces behind the names. So just a quick question for each of you. Olof, if I start with you. I mean, what does a VC do in crypto winter?
Well, you know, when there's winter in Europe, there's summer in the southern hemisphere. So we moved to Africa. And we did that the last 12 months, and we think there's a massive opportunity. And in fact, we believe that blockchain is a technology that is made for that continent. Definitely. You'll hear more about that later. Exactly. And on a more serious note, obviously, you get a little more prudent, both us, startups as well, in terms of fundraising, in terms of having a bit of a more reserve. But fundamentally, we believe whenever there's a market correction, that's when winners are being made. So we're very positive about the long-term outlook.
Good. And Ruth, what's your goal, let's say, with CVVC going forward?
My goal is with CVVC that we continue our growth and expand further our ecosystem, kind of like being expansion in Africa, but elsewhere in the world, and gaining as well a financial and operational excellence performance on that, and being the place to go to as well.
Which it definitely seems to. Let me give that to you, Florian. And Florian, I know that you're developing the CV Labs ecosystem across, I mean, the globe, let's put it that way. Maybe tell us a bit the destinations that you're going, and what's sort of the most exciting opportunity, apart from the apparent, about this?
Well, the most exciting thing is that to actually find these new hotspots where this amazing community is moving to next. So currently we think, or we are convinced, that, for example, Berlin is going to explode. That's why we open up a shop there. And there's going to be many more to come. But that's the exciting thing. Find out where the community is moving so we can be there first.
That's good. And one thing I'd just like to conclude with, because this is also for the audience, just, you know, extended from the titles, a bit of a fun fact. So sorry for taking you on the spot. But Mathias, let's start with you. A fun fact about you that we don't know.
Fun fact. Oh. I've been in this NFT metaverse area just before. I actually get seasick. Call it seasick with the goggles, right? But I can't wait to emerge, so let's see how it goes.
I think our sense of balance is going to get you acquainted to it.
It's not a fun fact, the first one. I've been a banker for 20 years, but I also own some farmland. So I have my own chickens, as well as a little bit of a fruit orchard at home.
Well, so if the great winter does come, you know, you're fully sufficient.
Yeah, exactly.
And Ruth, what about you?
My fun fact is...
Oh, sorry. Yes. Apologies.
Sorry about that. My fun fact is I'm happy always to smile, but I can be very serious as well. And I love to work with earth, so you can see me sometimes on a vineyard.
Then you're always sufficient with the elixir of life, wine.
So what was that fun fact you said?
Yeah, something fun.
It's hard. Animals as well. So I think a fun fact is that I've been with CVVC for about 2 years now, and my dog, whom I now and then take to the office, is still more famous than I am. So it's sort of a therapy. When he crashes meetings, he's sort of a therapy dog sometimes. People love him.
We call that the dog trick in Sweden. So thank you so much. And before you leave, I actually also want to give acknowledgement, because arranging a summit like this, it really demands a lot of people, a dedicated team, and a lot of resilience and time. So I thought I would consolidate the voices of all the people who are in the team of arranging this by introducing up on stage the Managing Director of CV Labs. Give it up for Tracy Traxler. You're already mic'd up, good. So Tracy, you're the one who I also met in Davos, and thanks to you, I'm here moderating this, but you're also very engaged in the CV Summit. I mean, you're also going to host a panel at the end of day 2, but tell us what makes this year so unique.
I mean, we always strive for a fairly balanced mix when it comes to the attendees, as you already mentioned, right? A lot of different stakeholders represented, but I think I'm particularly excited because this edition of the summit truly showcases that marriage of old world and new world, whether it's classic corporates that you have known for decades, classic institutions that you may have known for decades. I mean, the fact that we're able to welcome sponsors like Visa and Google and Citi, for example, of course, for us is a huge accomplishment, but also just a very exciting turn of events. And we look forward to adding their voices to a lot of the discussions that'll be taking place over the course of the next 2 days.
And a fun fact about you?
Oof, maybe a fun fact. I own 2 passports, but I spent the first 5 years of my life in 6 different countries, none of which matched that passport. So I spent the first 5 years of my life in large portions of the Middle East.
Nice. Beautiful fun facts. You're doing so much good work. Keep going. And some of you will be on stage again, but thank you for conveying your knowledge so far. Thank you.
Thank you.
Thank you.
Thank you.
So let's dive into the content of the conference. And we're going to start off with a keynote that is about entering the era of adoption. Now, as I'm in Switzerland and in Zug, all of you know that Switzerland has the highest number of blockchain startups per capita globally. And therefore, I think it's good for us to find out the Swiss mindset that I also encountered about facilitating blockchain innovation and learning how the blend of the traditional financial world with the next generation of blockchain tech applications, what that can bring to fruition in this era of adoption. And to talk more about this, we've already seen him on stage. Give it up for Olaf Hannerman.
Thank you very much. I'm back. So I wanted to start this little talk with some comments on the economy. And then I thought, bummer, how do you start something with comments on the economy? And you need kind of a first opening line that is positive. So I'll start at the end and then talk about the economy. And the end is, in my mind, innovation is the answer. And innovation and technology and driving that forward and driving positive change is the answer to the situation we're in. So today, a lot of the leading economists, their view is 50-50 chance that in 2023-24, we're going to end up in a central bank-induced global recession. Right? Markets are pretty grim. You see on one side positive economic data coming from the US. On the other hand, you have a war going on in Europe, you have a geopolitical crisis, you have economic uncertainty, mostly energy price driven in Germany. You have question marks in Germany over them having to ration the chemical industry this winter and what that means for supply chain, not just in Germany, but across Europe. So there's a lot of angst and there's a lot of uncertainty. And obviously, as you all know, our markets, crypto, digital assets, and venture capital have not remained unaffected. How could they? Now, having said that, as hopefully you all, we believe at CVVC that long term, there's a lot of megatrends right now that we see. AI, machine learning, artificial intelligence on that side, personalized health, longevity, and all of those topics. And then obviously blockchain technology, which we believe can be a catalyst technology that can drive a lot of these technologies in their efficient adoption as a long-term opportunity. And in fact, we believe at CVVC in the next 5 to 10 years, you see what we call the era of adoption. So segmenting that down a little bit into a few things that we're already seeing, starting with digital assets. If you see those names up there and you know what's happening, BlackRock looking to partner with partnering with Coinbase, Fidelity in Europe offering the first physical Bitcoin ETP, other products offered by established asset managers, I think you can make a tick on that question of, is it an alternative asset class? So that's happening already. The only question is how fast and who's going to be left behind because they're going to miss the train. And I think a lot of that can be said for a lot of other industry as well. Now, in the financial industry, it's not just about crypto and digital assets, but it's also about DeFi. It's about taking some of the middlemen out and making systems more efficient on one side. But also for established universal banks, there is a wide range of areas where this technology can be applicable for them to run business models totally different. And you see here the example of our friends at Citibank, where basically across many of their divisions, consumer banking, markets, corporate banking, treasury and payment, they're working on projects and they see potential for this technology. For the bankers and the finance experts in this room, if I'm just saying, if you think of a technology that once it's fully operational and fully industrialized, will enable settlement in an instance, you know what this can mean for banking and finance and corporate treasury throughout the world. So that being said, no surprise that in terms of corporate M&A, corporate venture capital, strategic alliances, there's a lot of banks on the list of investors into that space, but also a lot of other industries. This is data from the last 12 months. And the top 40 companies that have invested in the space, all large corporates, have spent around 6 billion through strategic alliances, investing in startups, investing in projects in this space. 6 billion the last 12 months in this space by the top 40 companies. Most active, Samsung, consumer electronics side with 13 deals. Most money spent is from Alphabet, 1.5 billion over 4 deals. So also wide range acceptance and investment into the space by a broad range of corporates. Now moving on to two of the big topics from the last, I'd say 12 months, metaverse and NFT. There you see, all industries looking to get in from e-commerce, entertainment, fashion, technology, and other. And you'll hear more about that tomorrow, I think from 4 o'clock in the keynote and the panel on all the use cases that you see there. Same on NFTs. Very exciting to see that NFT use cases are more than just digital art and or art and digital collectibles, but a broad range. Today from 3:30, you'll hear more about that. And obviously in the NFT gallery, you can see the art side of things, which I think is really exciting as well. Now at CVVC, we're all about startups. And for us, it's really exciting to see how some of our startups and our portfolio companies challenge established business models and come up with new innovative ideas to do things. So think of the music industry and Utopia with their mantra of fair pay in the music industry. Think of digital advertising and creating a higher trust level and a higher degree of security in digital advertising, a startup called Atash. Think of how to more efficiently manage remote teams and remote work, and a project from Sprinter, and all of these projects are here, and you can meet them in the Startup Lounge, which is just above the NFT gallery. What really gives us goosebumps is that there's a lot of startups that also work to make the world a better place. So you're having projects in the ESG impact side. You're seeing projects, in particular from Africa, on banking the unbanked. Feeding the World is a project, Agrio from Brazil. Again, many of these startups you can meet today, or you can reach out to us and learn more about them and their use cases if you're interested. In closing, we believe at CVVC that innovation is a team sport. That's why we're doing these events. That's why we're doing startup incubation, where many of you, our ecosystem partners, also contribute to work with us to help these young startups in their first steps. So all I can say is invite you to network, use this opportunity of this event, but then also partner together and capture the opportunity together as a global team. Thank you very much.
Thank you very much, Olaf. You'll soon be back for a panel. There we go. So as mentioned, the crypto winter is here, but it implies challenges and also opportunities. And this is a time also that was explained where there is less speculation in the market, which is a good thing because it brings also transparency on which projects actually add long-term value. And it also can clarify a user base beyond speculation and trading. And it can also show which companies do really have a healthy business model. And I'm sure we'll also see some consolidation in the market, like the former bear period. But there's also a lot of money flowing into the blockchain ecosystem, even during this crypto winter. If I have the statistics right, it's like $6 billion for corporate VCs and M&A investments in the last 12 months. So as we have two sides of the coin, some think it's, there's a lot of problems with it and others who are more optimistic. Maybe we should have a matrix reference. It's about the blue pill or taking the red pill. With the blue pill, it's all reading the gloom and doom headlines about the end of crypto as we know it. Whereas the red pill, you can simply follow where the smart money is going, flowing, and what it's doing, and showcasing that blockchain technology is here, and it's also here to build trust, because trust is a commodity that we need more than ever, not only in technology, but also in our lives. So with that, it's time for a panel conversation on smart money in the market, having VCs giving their perspectives and strategies investing in blockchain tech. So with that, I'm going to invite my three panelists. We have Ivan. I'll invite you all up on stage and I'll give a short introduction. So Ivan Anastasov, who is COO of TrustSwap. We have Alexander Kech, who is Director of Blockchain and Digital Assets at Citi Ventures. And Olaf comes again, so give a round of applause to Olaf. You can sit there in the middle there, I think, so I can. And this, ladies and gentlemen, this is for you to be able to ask questions. So I'll ask some questions, and then I would love to have you participate in this. The thing is, a funny fact about me, I was asked to do this once. I was sitting, and I wasn't really concentrating. And I didn't really, have that hands up of doing a loop. It sort of went right in and bounced back. So I will give the gentleman the opportunity to throw this out to the audience. So who is the rugby player? Okay, so I thought I'd give a quick introduction. Olaf, we of course have introduced you, but Ivan, you're COO of TrustSwap, and briefly, TrustSwap is a company that provides blockchain-related multi-chain DeFi tools and services for both corporate and retail customers, and you have 4 verticals. It's team finance, launchpads, Swappable, which is an NFT platform, and by the way, TrustSwap is also the main partner of our NFT gallery. And then you also have the crypto app.
Exactly.
And then Alexander, you have 25 years of knowledge within the business, both within the traditional financial sector, payment sector, and ISO standards. And of course, Citi Ventures is a company that offers tools that are really relevant to the financial industry to sort of catalyze innovation and accelerate growth. So we have 15 minutes for this panel, which is quite short. So I thought if we try to cover, maybe keep to 2 topics, but the audience can ask whatever questions they find relevant, but maybe look at startups and then sort of look at the market as a whole. So just briefly, out of each of your perspectives and your companies, just give us a brief overview. What is this momentum, of the sort of crypto winter and bear market? How is it sort of implicating your businesses?
Yeah, I mean, I see the current situation in the bear market more as a reality check for most of the crypto startups. So do we really need the number 256, the metaverse, the number like whatever, 800 P2E game, etc.? And also from an investor perspective, I mean, the bull run last year, it's incredible. I mean, like we helped 45 startups to launch, and we helped them in the private and seed rounds. And most of the VC investors, even like big names or exchanges, corporate VCs of exchanges, they were not asking any question related to the business model. It was not relevant if there's a business model, if there are users, etc. The most relevant things was which exchanges are you listing, which influencers are talking about your project, and they try to exit within 3 to 6 months because they know that the retail investors will FOMO in and pump the prices afterwards. And on the other hand, retail investors did not really understand what they're buying. I mean, like if you ask retail investors, like what exactly are you buying? I mean, you're buying utility tokens, you're buying the option to participate, you're actually buying a coupon code. Most of the people did not understand. Some people think that, okay, we're investing in this company. And some of the things which happened, and that's why the whole big bubble came out, is that retail investors were buying into some things which they did not understand in the hope that they were reselling it to someone else who did not understand it. But now we're back to reality. Now VCs are asking real questions, business models, users, et cetera, et cetera.
I think that's a really good point to make, also showcasing. I mean, of course, everything in the beginning, there is a complexity of both understanding the market, understanding the whole ecosystem. But Olaf, out of a VC perspective, do you relate to this?
Yeah, absolutely. So first of all, the overall tech startup market was very, very hot, and prices were quite high the last couple of years. And then you add a startup that has blockchain or crypto somehow involved, and you do a 2x, where really logically you either have a great use case or you don't, irrespective of whether you're working with blockchain as your tech stack or artificial intelligence or something else. So that wasn't called for, and that has normalized. Obviously, the overall VC market has normalized and has kind of rebounded. So for us overall, that's a healthy environment. Now, obviously, what then sometimes in these market corrections is a bit of a shame that capital also overreacts and becomes too careful to invest in something that is a very long-term opportunity, because they want to, a lot of investors want to keep cash on their reserves for public and liquid markets to rebound, and maybe a little more careful putting money into 8-year VC. So fundraising is a little more difficult, but at the same time, I think the general kind of normalization of venture capital and tech, and then blockchain tech market environment is good for the industry medium to long term.
And I mean, you meet very many startups, because that's what you're, and sort of has the energy, or also the way they pitch their different blockchain-related innovations, has that sort of become more on par?
Yeah, it's a bit more normalized and a bit more humble, but that's healthy. I always find if you're a startup and you get capital too quickly, or in any person, I mean, right, even like large corporates that have too much money typically do dumb things. The same goes for startups. If you get too much money too quickly, you start spending it potentially not so wisely. So in terms of the behavior, obviously we have a lot of discussions with portfolio companies as regards to having longer buffer, being a bit more conservative in terms of not just your spending, but also when you raise funds and there is an opportunity to have longer windows. So that has changed as well. But I think that's all long-term positive.
And Alexander, what do you see? I mean, also looking from the institutional side, Citi Ventures is a large institution themselves. What's your take on that?
What I would say that, well, first, Citi has started investing in blockchain and digital assets quite recently, I would say in the last 2 years. Before that, I think there was still a question mark on whether this was a sustainable business and industry. And I think now that's no longer the question. So when you look at the market condition in June, for example, and July, what really struck me is observing that at Citi, nothing stopped because of that. So, and at the other banks, neither, meaning that any digital asset project that was ongoing has not been challenged by a senior leader saying, well, you see, this is crap, you should not be investing in this type of industry. All projects are going as planned. There is no doubt about the fact that it's part of the future. It's, the crisis in June really didn't change that perspective. And in terms of investments, we continue to invest in infrastructures. We will not invest in Kraken or Binance or an exchange because that's too close to crypto, but we want to invest in the pieces of the puzzles that are required for a bank like Citi to get more engaged into this industry. For example, companies like Blockdaemon, which is a node hosting company, or TRM Labs, which is a blockchain monitoring tool in the compliance space. So those tools that will be required and are required by banks like Citi to enter this space.
Did Olaf, just thinking out of...
yeah, maybe if I can add to that.
Yeah.
So what we experience with the banks, which is on one hand great to see, and then sometimes a little bit frustrating from a European bank perspective, and endgame winners, I think all have captured that, what you're saying. And I think a little bit, in particular, the American banks, and I firmly believe, I always call it because they had their PayPal moment, where there's non-bank financial competition threatening, right? Whereas what we see in Europe still quite frequently is so the leaders are not afraid to cannibalize themselves because otherwise someone else will do it. So the real, challenge for the European banking community is to get on that kind of thought process and say, hey, if we're not doing it, someone else will.
What's your take on what's been said, even also out of sort of the perspective of trust swap?
I mean, like, first of all, for us, like working with the banks and just opening a bank account, we see it's like very, very difficult. So we see a lot of banks like being like completely out of the game. We don't even want to talk to the people. Whereas we are, for example, on a couple of projects working together with the VP Bank, and they are also together with us at the NFT booth. You can check them out. So they're one of the more proactive. In general, I see that most of the banks are very, very like hands-off.
And can this be related also to, the security issue? I mean, security has, of course, become better within the crypto space and blockchain and so forth, but it still has its, elements, not least with everything that happens digitally. I'm thinking, Alexandre, what's your take on that? Is that one of the...
No, I think it's more the regulatory uncertainties that still exist, especially for big banks like Citi, regulated by the OCC, the Fed, and multiple other bureaus in the US mostly, but also across the world. And the lack of clarity on how the OCC and the Fed, for example, wants to see crypto in the future creates conservatism. And it's natural because we are a global bank present in I think, more than 80 countries. We can't just do what we want without a sign-off, I would say, from regulators, which is logical with the balance sheet that we have. But on the technology side, I don't think there is any doubt that there are today solutions available for dealing with security, dealing with even risk management around those assets. But it's just a question of time, and banks like Citi takes their time to make sure that once they offer products, when they enter this world of digital assets, they do it in a way that will not put them in the press the next following year for bad reasons.
And I guess, regulation is, of course, a big part of it, and that's also what we're going to be discussing during these 2 days. But one part is also the collaboration across sectors and really bringing key stakeholders together. And I'm also thinking it's probably also critical for the regulated sector to collaborate and ensure that we don't, let's say, end up with an chaos of non-interoperable blockchain implementations. Do you see that this is actually happening, that the collaborative node is what is sort of getting digested into it?
I'll do a little speech tomorrow on the topic. Yes, it is happening, especially in the space of digital money, around central bank digital currency, around bank coins. You have, everybody's familiar with the JP Morgan coin. Well, all the banks are looking at ways of tokenizing money for better treasury management for their corporate customers, for example. This is the case of Citi as well. So in there, you need collaborations. You can't imagine having a JP Morgan coin on this blockchain, a Citi coin on that blockchain, a UBS coin on another blockchain, and then a corporate customer using the three banks not being able to have the same user experience or not being able to interoperate with the three in an easier and cost-effective way. So yes, it is important. Yes, it is happening. I'm glad to see that it's also happening with the push of Citibank itself. We have a concept called the Regulated Liability Network that I will talk about tomorrow and I think it's important, yes.
Anyone want to comment on that?
No, maybe just to add to that too. I mean, also, to change systems within a bank takes a lot of time. I mean, I can imagine if just to change a regular cash management system for your corporate clients is probably a process if you're upgrading of 3 or 4 years. And then you're testing with middle market first before you roll it out to the big ones. So you imagine you already have, you have that challenge in general, and now it's a totally new technology. And when I speak to a lot of people within the lines of business of banks, I often hear, I'm not seeing it yet. And I keep telling them, well, you won't see it for a while, but at some point it'll hit you like this and everything will be different. So I think it's just a lot of time, a lot of testing, a lot of certainty before you can roll it out for financial.
And ideally it should be invisible to the corporate customers.
They don't care.
Who cares it's using blockchain at the back, as long as it's 24/7 and it's cost efficient, that's what matters for customers.
Exactly.
I mean, I can totally relate to that. I mean, the infrastructure is still in a build-up phase, and we work together with a majority of layer 1 protocols. So we did the first ICO on Algorand. We advised the first ICO on Avalanche as well, and we worked together with the majority of layer 1 protocols. And like when we did those launches, like simple tools were missing, like multi-sender tool, or like the exchange connection, or like the bridges. So I totally understand that, like even for us it was quite difficult. So I can imagine for a bank, it like where like a lot of like other requirements are there. Like, I mean, there are a lot of people working on the space. It would just take more time. And yeah, I mean, what we see always is that people overestimate the short term, but underestimate the long term. And that's one of the reasons why we're in the bear market right now.
Yeah. And I mean, we are also paving way for a totally new financial structure parallel to the fiat world. I would really love if we had some questions, because your questions are the most relevant. Do we have? And don't. Hopefully, we have an audience who is wanting to ask questions. Usually, it takes one, and then it sort of starts. Does anyone have a question? Yes. So, Ivan, I hope you really.
Let's try my best.
Yeah. Yes.
You almost killed my CC.
And keep it close to underneath so we hear you. Yes, perfect. There, yes.
I should go there. Okay.
You should go there.
What do you think about privacy in current blockchain world? How it can be defined, how it can be used, and how the VCs will invest in it?
The question was,
the
how do we see
projects connected to the privacy or anonymity or things like this.
I personally think privacy is the two-sided sword. On the one hand, like regulators don't like that, so they start to kill privacy coins like Dash, Monero, Zcash. They're going to be delisted more and more because they can be used for money laundering and some other things. On the other hand, big corporates like banks don't want all their transactions on chain. So like big corporates and banks will need that, whereas like the regulators will need to have some kind of way to check those transactions. Would be interested to hear your thought.
I get the interest that we have in such a topic is around digital IDs, because I think without digital IDs, it's complicated to deal with that KYC and privacy issue, because they goes together. It's not because you are KYC that you necessarily lose your privacy on transaction per transaction basis. It just needs to be done at the right level, the right type of threshold of transactions. So I don't think we're there yet in terms of discussions with the regulators on how this should be handled. Some people are arguing, with cash, meaning US dollars in your pocket, you can do any transaction without being questions about your ID. Yes, except that with digital money, you can literally have trillions of dollars into a USB stick and transact openly, I would say, peer-to-peer. So there's a trade-off to be done, and I think VC funds will be going towards companies that finds the right balance between privacy, but the need to comply with the existing regulations.
And I know we've run out of time, but as you know, does one more person have a question? Let's seize the opportunity. Yes, next to you. Perfect. Alex.
I heard you guys talking about central bank digital currencies. Let's say, at least here in Europe, governments are not super innovative. How do you guys look at the implementation speed on any CBDCs here in Europe?
I don't have a take on that, to be honest. I think it will come and it's unavoidable because it's so efficient. But I think also there is a massive risk in central bank digital currencies that if it's in the hands of the wrong government or the wrong regulator, they're going to know much more about you and us than already. And they can, if it's in the wrong hands, also you can manipulate with that information. So I think, in the right hands, it's a very efficient tool. In the wrong hands, it's a tool from hell.
Yeah, I'm personally also a little bit skeptical about that, because if you think about that, what the central bank can do is they could say, okay, for example, now we give people helicopter money and they're not spending it because they're afraid. Now everyone who does not spend at least 70% of their salary will get additional taxes. Okay, this industry, for example, the travel industry is not doing well. So if you guys don't spend at least 10 or 20% of your salary to that, so they can absolutely control everyone. So it's, as you said, if it goes to the wrong people, that could be quite dangerous for our privacy and yeah.
Privacy, always an issue. Thank you so much for conveying your knowledge. And also, if anyone in the audience, if you want to continue this conversation, can they reach out to you during these 2 days? Is that okay?
Sure. That's why we're here.
Olaf, Alexander. And if you can't find them and you see me, ask me, and I'll help you locate them. So a round of applause.
Thank you.
And the catch box? Oh, don't throw it. No, don't throw it, Alexander. You can bring it up on stage. I know otherwise we'll have a fun fact number 2 for me. Let's put it that way. Okay, so it's now time to look how value is being transferred between individuals, entities, and also companies. Tokenization, and also reimagining the exchange of values. And here to talk more about this, we have the founder and CEO of PraSaga, who is, we're happy to say, one of our main sponsors. And Michael Holdman is an IoT smart city global industry thought leader who believes the solution to the root of our problems is to decentralize networks to ensure the individual has control of their data and their destiny, and hopefully their privacy. He founded PraSaga to empower individuals across the globe through the power of blockchain technology. So to talk more about reimagining the exchange of value, give it up for Michael Holdman.
Thank you very much. Is the speaker working, or the mic? Good. My name is Michael Holdman. I am founder and CEO of PraSaga. We are a single-layer blockchain. We've been in creation since September 27th of 2017 in research, design, architecture, proving out, and we're finally at the stage where we are building the actual blockchain itself. Just last week, we received our second patent from U.S. Patent Office. This one is on our what we call extensible blockchain object model. Production name is Saga OS. What we've done, and I'll go through this kind of in the slide. I've only got 6 minutes and 16 seconds, so this is very difficult for me to get through. So we'll jump in. So the team, we've got 8 members here, including myself, Nicole Colwell, Jacob Holdman, David Bieberman, Stuart Worrell, Jay Moore, and who else is here? I think, Corky Bizyak and Mary Basil. So please, if you see any of us around, we'd love to talk to you. I want to welcome everybody to this. We're very proud to be the presenting partner with CV Labs and CVVC to have this blockchain. So this here, Albert Einstein, pretty smart guy. This is something that we've lived by. This is my 6th decade. I started in 1978 pulling cable. This is Dave Bieberman's 6th decade. He started his first program he wrote was something called WYSIWYG in 1978, which actually became the Wayne word processor. And then Jay Moore, 30 years, mainly in video gaming. His largest company, he wrote they introduced the very first ever open gaming engine. So developers of games could now go out, not have to pay studios $1 million. He sold that for $70 million in 2004. We've had 21 startups between the three of us, 8 exits, and over $100 million in exit. Cannot solve problems by using the same kind of thinking when we created them. That is something that we've absolutely lived by through our entire lives. There's always, you've got to find a better way to do it. And there's always sometimes a better way to do it. So what this leads us to is how we got here. We first of all had to reimagine, then we rethink, and then we reinvent what's going through. So reimagine, global economic equality. We worked on this for a long time. Before blockchain, we weren't here to write a native blockchain. We were here to implement a blockchain or integrate one with our high-performance IoT smart city message bus. The problem was this blockchains don't scale. And so we had to find a solution to that. And that's where we went into research. The idea is, how do we get out there, become the underlying foundational infrastructure for all global transactions, financial or other? And how do we go about in creating an equal playing field globally so that you can participate no matter where you live in the world in a global commerce? So you can bring your talent and your goods and your thoughts and intelligence into the world that a lot of times they're forgotten about. So rethink, how do we make the world a better place? How do we do that? How do we create the equality? How do we bring in more minds? I always think that, you know, we're probably missing out on some of the greatest creations ever because the intelligence that's in the jungles of Africa or down in South America or the rainforests within Indonesia and such, we don't have access. They don't have access to us. And we're certainly not really going out of our way to have access to them. So are there things there that could help us as the entire world population by making sure they're included in it? And reinvent, doing good for the world, not just producing goods for the world. How do we make sure that everything that happens, that we have an immutable, transparent to a degree, or we can call them actually opaque, because we have figured out a way through our system to include private enclaves where enterprises can have their own shards, keep all their own data, but still share the hash power from the work that they do in order to get security from the overall public chain onto the private chain, and also contribute to that. And how does that make everything better for life? I mean, one of the things that I talk about, and this is, you know, doing good for the world, immutability and traceability are very, very important. There was an incident in November of 2021 where there was a guilty plea by a woman that works for Boeing in Seattle, Washington. And she pled guilty to changing the meteorological data on the steel that's used on US nuclear submarines. Well, this is not a good thing to do if you have compromised hulls on nuclear submarines. These are the kinds of things that we talk about when we say do good for the world, make sure that we don't have those issues. And that's one thing that blockchain can solve for enterprise. So the value of an economy, this is funny because central banks, and they're doing great these days, aren't they? Value of an economy is not a reflection of its money. The value of the money is a reflection of its economy. The central banks want us to always consider it the first. It's not how much, what your dollar is worth. It's the productivity of your citizenry. It's the natural assets that you own. It's your contribution to the environment. How much carbon are you putting into the air? Should that affect your GDP and such? We believe it should. There should be outlined values that come in and make sure that we are being good world citizens, all of us, not just, you know, the more progressive world nations and such. So revolutionizing industry, this is really one of the things that, that this did. What we did is we eliminated smart contracts. Does anybody here know a gentleman named Gene Amdahl? Well, he was a computer scientist in 1967 that was looking for a way. He wrote a formula to figure out where in a mainframe you could do parallel processing and where the process would serialize. You can only do one at a time. It would be in queue. We took that formula, it's called Amdahl's law, it's computer law. We took that and we applied it to blockchain. And we found out that the actual smart contract is a point of failure for scaling in blockchain. Smart contract serializes to the individual shard. You cannot move it from one shard to another shard on layer 1. Technically, it's possible on layer 2, but you have so much inefficiencies and security issues with that, you don't know if a shard is a fork of a shard that you're dealing with on the other side that you're sending to. So what we did is we actually went out and took the same exact underlying architecture that's used in all Windows-based operating systems, whether it be Windows, Mac OS X, Linux. It's all from a product called Smalltalk, a message passing architecture that was introduced by Xerox in 1972. And what we did is we took that and figured a way to put it on the blockchain. Industry's been trying to do this for ages. How do we share classes from a single individual class tree on a laptop across all of the devices? Well, we figured that out. So now we have this single instance global class tree and a single global namespace. What does that mean? That means that now every single thing is going to be numbered, get assigned a digital ID, a 256-bit string from a decentralized blockchain. This 256-bit string will not be repeated for billions of years. In a 256-bit string, you have enough for all 8 billion people, every entity, and all products that are going to be produced. If you want a little more namespace, we can add a character, and we've just doubled the namespace, make it 257 or 258. These are problems that now have easy ways to solve. And I would love to talk to you more about it. I'm out of time. I thank the team for allowing me to go a minute or two longer. We are looking right now for developers, for miners, for token purchasers, and for projects. We've got 40 projects building on us in the last 3 hackathons that we sponsored, starting with Consensus in Austin in June, HerDAO in New York, as well as HerDAO in Korea from Korea Blockchain Week. We're very interested. We do have token sale going on right now to have those miners and come on during testnet and produce coin and make sure that we're fully globally able to produce, make sure that we are able to take the transaction influxes and that come in so we don't have to restart the chain and such like that. So please, everybody, look for us around. We have a booth upstairs as well. You can come up there and talk to us, and we'll kind of be around with everybody. So thank you very much. Appreciate it.
Thank you, Michael.
Thank you.
Thank you, Michael, and thank you also for emphasizing also that we have to, create value by doing good and really showcasing that in the world. Now, from reimagining to redefining capitalism and empowering companies to self-finance is what our next speaker is going to talk about. Now, Nicola Plain worked for 5 years as a business engineer and project manager in the automotive industry via his small consultancy company. But he was disillusioned by large companies' resistance to change, and he promised himself to only work with companies that were very reactive and flexible by the environments in the future. So a decision that led him to become CEO of Aktionariat. I'm not pronouncing that the German way, but he will. A company that takes advantage of the new Swiss DLT law to allow companies to create a marketplace for their shares on their own website. And this is also powered by the Ethereum blockchain. Now, before Nicola comes on stage, I want to reveal a fun fact about him, and that is he has a hobby for building dry stone walls. Now, that's a really interesting fun fact. So let's ask him at the end of his talk, what does that imply? But now let's hear his talk on talking about reimagining the exchange. No, that's not the one. It's redefining capitalism and empowering companies to self-finance. So give it up for Nicola Plain.
Hello, everyone. Thanks for having me. I'm Nicola Plain. I'm the CEO of Aktionariat, and I will show you how we use the DLT law in Switzerland in order to redefine capitalism and empower companies to self-finance. So we will start with a brief overview on security tokens in Switzerland. I guess most of the people in the audience will already know a lot about it, so I will make it rather short. So 2016, one of the two founders of Aktionariat had the idea that it would be extremely valuable not only for companies but for the whole Swiss economy if we could put shares on the blockchain in the form of tokens. So he published the first article in the NZZ 2016 talking about the possibilities and how that would help Switzerland as an economy. This article was followed by more articles on this topic, academic articles, but also more articles in newspapers. And never would he thought that a couple of years later, Switzerland will introduce such a law, which went through the normal legislation process as every law does in Switzerland. Lucius Meiser was also highly involved in advising the parliament to come up with this law. And on the 1st of February 2021, Switzerland introduced the first half of this law, allowing to mint shares on a blockchain. And then in August 2021, the second part of the law was enforced, which is mainly about trading facilities, so decentralized trading facilities. So what does that change? What's the value of it, you may ask? And if you look at this chart, you will say it looks exactly the same as it looked before. So you had the traditional share in form of paper. First of all, you need to transfer it if you want to sell a share. And then secondly, you have to make sure that you are also registered in the shareholder registry of that company. And it's exactly the same if we do it with tokens. So why all the buzz, you may ask? And of course, the magic lays within the transfer, which is much more easy if you do it with a token, for example, an ERC20 token, but also the registration in order to be in the shareholder registry of the company is much easier because you may use a wallet where you can register your personal data and then it will be automatically transferred. So even though at first sight it may look like nothing changed, there is a lot that has changed, and I will show you later what that means, because today if you want to invest in a private company, it's usually a lot of paperwork, and most of us don't have access to these investments, and I will show you how that works with the use of the DLT law. So we are really trying to democratize private equity, and then you may ask, how can I benefit from that? So what's the problem today with private equity? There are mainly three problems. It's very exclusive, so only a few people have access to these interesting investment opportunities. But then if you're in, you're stuck because it's highly illiquid. There isn't a market. You can't really sell shares of private companies. And thirdly, it's very hard to price. So you may know it's always based on negotiations. No one really knows what a startup is worth. There are some models that you can use in order to determine the price, but at the end of the day, it's always based on negotiations between the investors and the company. So in our vision of open equity, we can solve all three problems at the same time. So we make it more accessible, so everyone will have the chance to invest in private companies. We can make it more liquid because we came up with a solution for a market, so you're not stuck with the investments for, I think, in average in Switzerland, it's 7.5 years. And since we will have a market, or we have markets, it's also more reliably priced. So if you think of a market for securities or for shares, especially you think of a market that is based on order books. But at some point, order books come to a limit. Why? Because just because a share, for example, is listed on an exchange, it doesn't mean that it's also liquid, because you need to have quite a lot of trades in order for an order book to make sense and work well. A very famous example is the NZZ shares, which are listed on an exchange, but they're highly illiquid because there are just not enough traders trading that asset. So that's when order books come to a limit. So we took the liquidity pool approach that you may know from Uniswap and applied it to shares of private companies. So you have two pools. You have a pool of tokenized shares, you have a pool of cryptos, and then people can trade against these pools. The difference to Uniswap is that not everyone can set up these pools, but the pools are set up by the company itself. And this is how we create a more liquid market for private companies than it was before. So that sounds nice in theory, you may say, but I want to have some proof. And I will give you proof because I will show you how it works. But first of all, if you want to learn more about Aktionariat, we also have a booth upstairs. If you go up the stairs on the left side, and of course, I'm always happy if you reach out through email or whatever. Here's the QR code to our website. You can also find my email address there. And that's about the theory. Now we move to the praxis. So what I will do now is I will show you how easy it is to buy a share of a private company, to invest, for example, in a Swiss startup with blockchain technology and our solution. Right, so what you can see here is a list of companies that we made investable through our tools that you can find on our website as well. So let's have a look what we have here. This Aktionariat AG looks quite interesting, so let's look into that. So this is the investor relations page, and that's what always happens. You will land on the investor relations page of that specific company, and then you will find our little tool called the broker bot, which is that one. And the broker bot allows you to buy and sell shares of this company. So since I'm a very poor guy, I will only buy one share of this Aktionariat company. So you start the buying process. All you need to have is a wallet. So you can use the Aktionariat wallet. That's what I'm doing right now. You open the QR code, you scan the QR code with your wallet as you know it with all the DeFi apps. You connect and you confirm the connection, and I'm connected to this trading facility. So maybe I have to switch the wallet address. And maybe I also have to switch the currency that I want to pay with. So let's try with Ether. Ah, that's possible. Okay, so what you can see here is my personal address and so on. Please don't take photos. Because I already have it in the wallet, so it's automatically displayed. You can check if it's correct. If not, you can change it. And then you click on Proceed. You have a nice summary here of what you're buying, how much that you're paying. And what you do is you just tick the box that you have understood the terms and conditions. You say Confirm transaction. Then the wallet asks me if I really want to buy these shares. And of course, I want to buy these shares, so I confirm. And now what happens is that the transaction is sent on the blockchain. And now it takes a minute or two maximum, and then the transaction is done. So instant settlement, of course, I have the shares, and yeah, congratulations, now I'm a shareholder of Aktionariat, and that's just how easy it is to invest in a private company using our tools and the blockchain technology. That's it from my side. Thanks a lot for your interest, and as I said, please visit us at our booth upstairs. We'll be happy to have a chat with you. Thank you.
Thank you, Nicola. Thank you very much, Nicola. And before we head for our 1-hour break, we're going to have a panel discussion. And this panel discussion has the theme of tokenized finances, security tokens, and the redefinition of value that we already touched upon. And I'd like to welcome up on stage to moderate this panel, Christina Lucrezia-Corner. She's the editor-in-chief at the Cointelegraph, and she's here to moderate the panel. So a warm welcome for Christina.
Hi, everyone. Thank you, CV Summit, for bringing us all together. I'm really honored to be invited to moderate this panel because I, as you understand, am a journalist. And for me, all this transformation of the financial industry from outside seemed like now a horde of blockchain nerds are invading a super conservative traditional industry. Instead of like black ties, we start seeing sneakers and T-shirts with some weird abbreviations. what is your take on this transformation of the industry you've been working in? Some of you for years, some of you for months, some of you for dozens of years, maybe. How do you see this transformation being articulated in your business, in your life, as a financial person? Whoever wants to start.
You're all looking at me because I'm the older one, so and I've been into this industry for what feels like a million years. I started off in 30 years ago in finance in Switzerland, in Ticino. And what was already 30 years ago the pinnacle of technology in financial markets, I started off with the first fully automated market, on-screen market, non-physical market, which was located here in Switzerland, well, virtually located here in Switzerland. The servers were here, which was Sofex, the first derivatives market. And the way I see this if I look back at my career and to my most recent part of my working life, it is not a stark different from what it was 30 years ago. It's just an evolution. Like all the evolutions, you see breaks that are really where you can put a finger at and say, this is really changing, not perhaps everything, but a lot. And the introduction of DLT technologies in finance is one of these moments. It's not much about the ties, I think. Those were gone already, perhaps 20 years ago. But I think is that this technology is so revolutionary that has forced people like me who come from the traditional world in finance to rethink not only the way you work, but also the way you relate to your investors and to your markets. I work for a financial infrastructure market, and the shift in mentality has been absolutely massive. There is definitely now a tool that can open up to users that can, and I hate the word, but is bandied around a lot, but can democratize access to financial markets. Then we can discuss, I'm sure we will, on whether more access, unchecked or unfettered access to financial products and financial markets is a good thing or not. But definitely, this is one of these breaking points in the evolution of financial markets and capital markets in general, where you can really look back, point a finger, and say, this has changed a lot. So, but that's my, sorry.
Thank you, Massimo. Well, Nicole, you were talking just in your keynote speech about this accessibility. We push it forward as one of the most exciting things in the industry, that now investments are accessible to everyone. So who is this everyone who needs investments? Like, do you think that everyone on the planet needs a tool to invest?
Probably not everyone. At the end of the day, the market will tell who will be the participants. I mean, what we can see from our side is that there is a lot of interest from people that formerly invested in stock exchange listed stocks to invest in private equity, because they know the risk is higher, but also the potential returns. So in order to diversify their portfolio, they're pretty open to do that. So there's a lot of demand, but it's probably not for everyone, of course, yeah. And we will see how that will evolve. I mean, there are some tricky things. I think we will discuss this a bit later as well. Usability, for example. I showed you how easy it is before, but of course I had some Ether on my wallet. What if I don't have Ether on my wallet? And what if I don't have even a wallet? So yeah, these are topics that companies like Aktionariat need to tackle and solve in order to make it accessible for everyone. And then if everyone wants, who will use it, we will see. But currently I think it's what I see is mostly people that used to invest already, but in exchange-listed stocks that want to have access to private equity now.
Thank you, Nicola. Thomas, what about your vision of the transformation of the investor's role and personality. Who are they these days?
I think the who or they, I very much agree with what Nicola said, right? I think we don't necessarily know yet who exactly this will be. I think we're also at the very beginning still of this transformation. But I think what we think about a lot is also what needs to be ensured and what type of levels or layers need to be rock solid when it comes to democratizing access to a wider range of investment opportunities. And there I really think in three layers, right? I think the first layer that must be rock solid is technology. I think the technology obviously shouldn't be buggy. It shouldn't have any loopholes. It shouldn't create any lock-ins with the provider that provides that technology that ultimately may put your investment at risk in terms of not being able to technically access your tokens if you need them in case the provider defaults or similar. Plus, I also believe there must be some sort of meaningful abstraction layer between the raw technology and then the user experience on top. The second layer, in our view, is really there must not be the slightest doubt that owning a token represents also ownership in the underlying asset. That is not something we can leave to the investor to verify or validate. That is something that must be given through legislation and through providers who issue such tokens or provide technology plus a legal framework to issue such tokens that are rock solid. And then I think the third layer that must hold is a layer of compliance, which is two aspects. Obviously, security tokens shouldn't be used as a means to conduct money laundering or terrorist financing. I think that goes without saying. But the other element to me that is really important if we think about democratization of investments is also investor protection. I think people, the more access we provide to a wider range of people, the more people will start using their money to invest, which may be a smaller or a larger portion of their wealth, but they deserve that we provide them with the right level of information, the right level of risk disclosure, and ideally even the right level of advice in order to ensure that they are ideally benefiting from the upside and not necessarily losing their money by just having access and by just throwing money around without knowing what the risks are behind.
But the big question there is, what is the right amount of information that you provide to retail investors that are not able to do their own due diligence and so on? So what is the depth of information they would need, and what kind of information would they even be able to process, right? And I think that's one of the big questions that also ourselves as Aktionariat are asking and figuring out, because I don't think also in future, most of the retail investors, they don't look at the numbers if they invest in a Tesla or whatever. They just follow the others, and maybe we can use that approach.
So it's maybe not only about information, it's actually about these analytic tools, it's about education. And well, I'm pretty convinced that we definitely lack education in the space, especially when we push forward this. This is accessible to everyone, and so everyone comes and think that, that they have everything they need in order to make a good investment decision. How do you approach this educational aspect of accessibility of DeFi, Arnab?
Yeah, so maybe like what you guys have mentioned, I think is a very precise point. Let's say, for example, Wirecard, right? It's a very big German IPO'd company, one of the rising star of German market. Every information according to the BaFin standard was there. And it is found out those informations were all fabricated by some of the big four financial institutions. So it's not about the regulation can always solve all the criterias and can save all the investors. Because regulation, the biggest challenge of the regulators right now, they don't know the industry. Regulators, that's the biggest problem of BaFin. They don't know how the financial markets are being used by Wirecard and how their operations are technologically working, right? So it's not about always, the disclosures or 600 pages, because that's my background, is coming from the legal side. As lawyers, we can draft 600 pages risk document, Everything under the sun can go wrong, that will go wrong, right? And we can write it, but that doesn't help an investor. Investor need to understand precisely, first of all, what is the key business and how they're participating into that by participating into that instrument. The second thing, I think this is one of the biggest, the transformative thing that DLT-based financial assets can provide is accountability. You will know where things have gone wrong. You may not protect that from happening, but you will know who is accountable. This is, I think, the key, because in traditional financial markets, there is so much middleman that you can easily take 6 to 7 months just to understand where exactly things went wrong. And by that time, the person is gone. You cannot do anything. But with the DLT, this is, I think, and now the DLT's question is it a DLT, is it permissioned architecture or permissionless? This, I don't want to go into debate, but the biggest challenge is when you're using a kind of a permissionless architecture, you can always find out who is responsible and where the things happened. So accountability, and with the information, investors get more accessibility in that sense, and a kind of reduction of risk, right? What we are trying to achieve is reduced risk in that sense, and provide the maximum information as much as possible.
But do they think that all those new retail investors of the younger generation that actually care about it? Like in case of something that it goes wrong, do you think that they have, like, well, I mean, the majority of this new generation has the ability and the will to actually understand what's going on? Or will they just go forward and invest into something new?
Maybe one interesting incident that we saw in the GameStop event, right? When the GameStop shares were being traded, they wanted to withdraw from Robinhood and try to, go to some other broker. But Robinhood didn't allow, right? And then a lot of people understood, okay, at the end of the day, I am not the real owner of the shares. It's somebody holding on my behalf. So the real ownership doesn't exist. That point of time, if you have seen Reddit or Twitter and those things, they really understood that the same concept that we have in Bitcoin, not your keys, not your coin, does not exist in the stock market or the capital markets. And that's the biggest fallacy. In the traditional financial market, though you think that you're owning the stocks, but you're not actually holding, you're holding through a number of middlemen, and if any of them goes bankrupt or something happens to them, you're screwed.
Well, it is only partially correct, because there is, in any case, a traceability of all the transfers, and you can reconstruct that. So there is always a beneficial owner of the assets at the end. What happens, which I think is the trade-off between the new technology and the old technology, is that to affirm that chain of ownership and rights takes time in the traditional world, whereas in the DLT-based world is instantaneous. However, you also bear the responsibility, as you said, not your keys, not your token, for example. How many of you here have lost the access codes to their wallets? I started investing in 2014 in Securitized. I lost them twice. I recovered them, one by luck, but it happens, and I'm extra careful.
How many of you have ever lost your wallet's key? Okay.
And how many of you have lost on Celsius?
Oh, you all lie so well. You all lost it more than once. But anyway, no, what I'm saying is not that one system is superior to the other. What I'm saying is that there are trade-offs. And what I think the key is education, but also the key is in infrastructure providers and members of this digital ecosystem to build that abstraction layer that you were talking about, and to use it to transition the two worlds together and make them converge. For example, with Aktionariat as an exchange, we are working to solve one problem. For example, to make sure that investors in Aktionariat can invest in private companies without having the need of cryptocurrencies and have a wallet where to keep the cryptocurrencies. We want to make the access to their investors easier, but in a way that they can pay with their cash in their cash account at their bank, and take custody in a well-organized and tried and tested technological solution of the custody of these ownership titles. Can be shares in other places. So I think that education is one thing, but exactly the example of the trade-offs between the two technologies. I think that our role as members of this ecosystem is to really work together to bring these two things together, because education alone will only go that far. Ultimately, as Nicola said, if people want to speculate, people want to jump into things, it's human nature. They will, no matter how informed or disinformed they are about it. Human nature gets the best of us all the time. So I think that it's really a little bit for us to put in place these mechanisms, these layers, where we can abstract the technology, abstract the methodologies and the systems, and make them more clearer. So have better user interaction between the services we provide and the investors.
People's nature is an independent phenomenon, but it's definitely influenced by advertisements, by trends, by social media right now. If we speak about innovation, evolution, we obviously, about the future, we obviously speak about young generation. So what do you think are those main decision-making reasons for the younger generation to become part of this space, to invest into an asset or a token instead, or a share instead of I don't know, buying a new watch or a new car or a new pair of sneakers?
I think that there is a clear lesson that we learned over the past 4 or 5 years, is that the gamification of investment is a bad thing, because it goes towards the sharp end of the markets that are influenced by different factors, by social media, by very different mechanics that have nothing to do with growing value and growth in an investment. This is the traditional part you can't go away from, not in the current economic environment and in our systems. We can change that, but not to a point where it becomes a commodity. So I think that's one thing. And the other thing is, perhaps we were talking about this in preparation, is deferring enjoyment and make sure that you invest to buy consumer goods, and then everyone's free to invest their money as they want, but use perhaps the markets to improve your wealth, and then use it to buy goods, and use it as an antidote to debt and accumulating debt, because consumer goods are mostly financed in debt.
Great point about gamification, and I saw the smiles here, so I really would love to hear your thoughts on that.
Well, I mean, I found your statement a bit harsh, but I think in general, I think when it comes back to what drives investment decisions for the younger generation, I believe it could be 3 things. One is curiosity, right? They want to explore new things, they want to explore technology, they want to learn as they go. I think the second element, and you touched upon it as well, right, is probably they hope to make a financial return, which they either can use then to buy something else that gives them pleasure. And I think the third thing is probably emotions, right? They will invest in things that they fundamentally like, be it a company, be it a project that, I don't know, does good somewhere in the world. I think it's these 3 things primarily.
And that's exactly the last point is exactly what we envision. We don't envision everyone invest in every company that we make available, but we want to give the opportunity that you can invest in the companies that you like. And since only 1% of the companies are listed on a stock exchange, the 99% of the companies that you may be our customer or you are a supplier and you like the company, you know the company, you use their goods or services, you should be able to invest in them. And then you already have like a relationship to the company, and the step to invest is much smaller, as if you stumble across a company, for example, on our platform, and then you have to check it out, see what they do, and then you start liking it. So I think that's a very valid point, and it's really clearly in our vision to give you the possibility to invest in the companies that you already like.
I completely agree, but that is not what is offered with the gamification of investments. It's a completely different story. That, what you described, is a very healthy approach, because it forces people to understand and understand. I'm not against investing in what you like and you're passionate about. I mean, God only knows how much money I lost about that, doing that. And I never regretted it for a second. And I think that private markets hold the future, the financial futures of the future generations. But I think that the way they are delivered at the moment, and this concept that if you make things easier, you make things very commoditized, where at the push of a button while you're waiting for a friend or something like that, you can invest your wealth. I think there's something that is the opposite of being passionate. You become very indiscriminate. Instead, I think that the process as I envisage for the future is more about what you're doing, which is a little bit perhaps we from the old traditional finance we can contribute to. But I think you're doing something new and something very healthy and very, very positive. What I'm against is this, facilitating, pile them high, sell them cheap type of approach.
I think what you're trying to say, okay, please.
No, just I actually wanted to ask your opinion because I agree with this because for me, I'm not a gamer. And for me, again, and I know that there are great people who are very smart and diligent, but for me, game has always been sort of a drug. It's like something that actually, creates obstacles to clear thinking. So I like this comment a lot, and giving the floor to you.
Yeah, so I think what you're mentioning is rightly, because if you see all this gamification of options trading and those things, it really entices people to go and they have, I think, copied a lot of elements from the online gaming communities that actually promotes gambling instead of gaming, right? Mm-hmm. So there's a lot of resemblance over there, and early stage stock market was a gambling in that sense, right? There's a lot of relevance if you see that way. But what we have seen also, and this is the value and the investment that what we see amongst the millennials is they have kind of a connection, emotional attachment sometimes to where they're investing. On Stocker, we have a gaming company that Infinite Fleet that raised over 1 million from retail investor with average ticket size of 200 because people were playing those games. So that's a part of the community. That community wanted to be supporting that game and wanted to be not only just an passive player only in the game, but also an active part of the community. And they became a brand ambassador. They became also your community member, because these days a lot of companies spend 40% of the investment capital in Google AdWords and Facebook marketing, right? Instead of wasting that money completely over there, why not you convert them to some of your brand customers or brand ambassadors in that sense? So that's definitely, I think, one of the key topic, right? And this is also where we have seen the entire ESG concept. Millennials, I think, are going more into that matter because they really think that they have to do something for the environment because they have to live into that naturally in that sense. So there is also a demand from that side also. This is, I think, theme-based investment or investment where there is an emotional connection is becoming more and more, I would say, in demand in the market at this stage.
Yeah, I mean, it's basically just giving your stakeholders an opportunity to be part of the story. And this makes a lot of sense to me as well. Yeah.
And also maybe this emotional connection actually puts the limit to this accessibility, because you won't invest in 100,000 projects because it's impossible to be attached to all of the causes.
But still, maybe I add something to that. We were speaking against the gamification of things, but still, things have to look sharp. It has to be sexy and it has to be usable, because even if you are a customer of a company that you want to invest, if it's too cumbersome, you won't do it. So, yeah, maybe we have to find a balance there.
Well, balance is key. Measure is key. We have 5 minutes. I really would love to throw this thing to someone. So does anyone have a question or comment?
I see here.
Oh, I'll try it.
Ooh, wow.
That was
sorry about it.
The throw was good.
That was a good throw.
My husband is a rugby man, so I
Nothing like starting off by embarrassing the questioner. Follow up on the conversation about investor protection. Can you comment more about how tokenized finance is working to comply with legacy investor protection and information disclosure laws and regulations? And then as a follow-up, are you doing anything to educate those regulators to push them more towards a structure that might be more in tune with the tokenized finance world?
Yeah, I mean, for us, since we are a regulated bank, I think we have to adhere to all these regulations. And again, I believe there is a reason why these have been put in place. And future always is heritage. So I think there is a reason why this is there, and we should adhere to it. Can we make it leaner? Can we also make that type of information more accessible, right? Not having to go through 600 pages trying to find there the nitty-gritty details that may expose you to certain risk, but really putting the opportunities but also the risks in the investors' faces, such that they don't have to spend hours and hours to understand, but they can understand maybe within the 5 minutes they invest into making their decision. Of course, we're talking to regulators a lot on many different topics, including these. But I think we fundamentally believe that investor protection in general is a good thing. The question is, how can we also make that more easily accessible and conveniently consumable?
Yeah, I mean, also there we have to find a balance. If it becomes too cumbersome, because you want to avoid someone losing their money, you will not be able to do that anyways, because at the end of the day, if you want to invest, there is risk involved, and the risk is that you will lose your money. What we did, for example, is we are a technology provider, so we are not an exchange or anything, so we are not regulated. But what we did is we came up with our own insider trading rules that all of our clients have to adopt. Because there were no insider trading rules, and we thought, okay, this can't be. We have to come up with something, because there needs to be some rules about that. So we came up with our own rules and forced our clients to use them.
Well, as an exchange and as a regulated exchange in digital assets, it's been a long journey with the regulators, because we were charting new ground, and they were too. So we worked very close with them to get where we are, and we were the first exchange in the world to be regulated, both to have a market and a CSD regulated by a financial authority. I think that regulation has still been written, and there's still a lot of work that is being done. And I think, again, investor protection is paramount. Is probably the keystone of everything we do as financial infrastructure. I think there is still more to do, and that doesn't mean that regulator has to become overbearing and I must say that our experience with the regulators in Switzerland has been probably the opposite. The regulators also don't want a massive monolithic piece of legislation and regulation that prevent business. I think the experience has been very positive. But I think that book is being written as we speak.
I think this is fundamental about the friendship. Like we are here to do together, and I think this constant antagonism between the business and the regulators is not a good thing to frame within the industry.
Yes, I think, and it's to be honest, very precise to the point. We are seeing in the European market, we are talking to a number of regulators, and we also got our approvals from a number of regulators. And we are in the market from 2017, so we have seen the things developed. And there is a pilot regime that is recently approved by the European Union. We see they have consciously chosen a policy framework, how they can actually trade and kind of distribute those regulated instruments, because the security tokens are not a different creature. They are a MiFID, so if you see in the European regulatory framework, they are a MiFID compliant transferable securities. So these are kind of the same securities laws they will attract than the traditional market will attract. The only thing, there's a technological component to it, and that makes it a little bit more efficient. Nothing, I would say, crazy about security tokens in that sense.
Absolutely.
Thank you very much. We ran out of time. I'm glad that we got from gamification to regulation. Let's get back to game. Can you please give me back the box? Almost.
You fine?
Yes, thank you very much, everyone.
Okay.
Thank you very much, Christina, and thank you very much to the panel. Great conversations, and I hope you will find that it's been relevant, interesting, and dynamic conversations so far. We're now going to take a break. Before you leave, I just want to mention the Brella app that I mentioned to you. Some of you have booked, maybe in here, have booked meetings, but there are investors out there who still haven't got confirmation of the meetings. So if you know you're one of them, or maybe our online viewers, go into the Brella app and make sure you confirm your meeting. Go to the NFT gallery, the Metaverse gallery, re-energize, mingle and network, and be back here at 3:20. We're a bit shorter now, 3:20, and we will hear from the Swiss Blockchain Federation to start with. Enjoy your network break. Thank you. So a warm welcome back. I see that we still have people coming in. Do come in, sit down to enjoy the second edition and part of the CV Summit 2022. A warm welcome to all of our viewers joining us via our live stream from all over the world. For those who might not have been here during the first section, we talked a lot about tokenization, we got into NFTs, we also talked about regulation, the VC's perspective on investing in blockchain and startups, and much more. So if you want to re-see anything, you just go in on the live stream on YouTube. So we've clearly spoken about the blockchain nation of Switzerland, that this was really enabled by the country's favorable legal structures and also the collaborative spirit that exists here in Crypto Valley. Now, to quote our next speaker, who has said, the potential of blockchain technology is immense. The Swiss Crypto Valley is at the top worldwide. All we need now is awareness. Awareness of the population, of the businesses, of investors and regulators, that an immense future potential is rising in the Crypto Valley. And we need to seize the opportunity. And here to seize the opportunity to talk more about this, please give a warm welcome up on stage to the president of the Swiss Blockchain Federation, Heinz Tenler.
Hello together, ladies and gentlemen, dear friends of the Crypto Valley. I'm very happy and I'm very surprised how many of you all showed up today. Full house, I do not see really, and a fantastic atmosphere in the entrance. That shows that Crypto Valley is alive. And how? It reminds me to the so-called, perhaps you know it, to the so-called Eternyze Schwingfest 2 weeks ago in Basel, where the atmosphere was almost as good as here in Zug. I have been able to experience the birth and rise of Crypto Valley from very close up over the past few years. Initially, a few programmers, entrepreneurs, and nerds moved to Zug. They tinkered with new blockchain-based business model in micro offices and rooms and events. I was fascinated by the networking and the dynamics. Today, Switzerland has the world's most globally leading ecosystem with over 1,000 companies and over 5,000 jobs. Crypto Valley is reaching a level of maturity and pioneering role that demonstrates blockchain and crypto are here to stay. Let me illustrate this in 3 concrete and current examples. First, those cantons such as Zurich, Ticino, Geneva, Neuchâtel, and Zug, which recognized the potential of blockchain early on and invested in the ecosystem, are reaping the rewards today. The city of Lugano in Ticino, for example, is considered the most crypto-friendly city in the world. In the community, because Bitcoin, stablecoin, Tether, and the city stablecoin Luga have become legal currency in Lugano. Secondly, you must have read about 21 shares announcing in double unicorn status last week. In 2018, founders Hani Rashwan and Ophelia Snyder were looking for a place to issue their crypto ETP. They analyzed 25 countries and their legislation and finally landed in Switzerland, where they found the best and most forward-thinking legal framework. Within 4 years, they became the largest ETP provider in the world and are investing heavily in the Swiss location and headquarters. Third, but not least, the Swiss crypto valley spirit is now also blowing in Africa. The Zug-based investment firm CVVC has launched the Africa Initiative with the Swiss government, the State Secretary for Economic Affairs, SECO, companies and universities. The need for alternatives for the unbanked is immense. In Africa, 2/3 of the population is excluded from the financial system. Thanks to blockchain, new ideas are emerging. There is much more to tell about the success stories that began here in Crypto Valley in Zug, in Switzerland. What is important to me is that concrete business models are now being implemented. Utility is on the rise, and further investments are being made in this groundbreaking technology. This is demonstrated by the large companies and corporates presenting their applications today and tomorrow. But it's also proven by the state, namely the canton of Zug. The government, I'm also a member of the government of the canton of Zug, supports existing research fields in the blockchain area at the Lucerne University of Applied Sciences and Arts in Rotkreuz, here in the canton of Zug, as well as the establishment of a blockchain institute together with the University of Lucerne. We have an ambitious goal. The institute is to become Europe's most relevant and comprehensive blockchain research institute. The existing technological and entrepreneurial blockchain competencies are to be complemented by scientific, applied, and future-oriented research expertise. Ladies and gentlemen, these are all essential steps and prove impressively that blockchain is here to stay. Many new ideas, startups, and initiatives come out of the crypto valley. In this spirit, I sincerely thank CV Labs, the event organizers, for their valuable and inspiring contribution to Crypto Valley and the blockchain ecosystem. And now, I wish you a good stay here in Zug, in our wonderful canton. I wish you also a successful event and also a lot of success in your life. Thank you very much for your attention.
Thank you very much, Mr. Tendler. Okay, so for about, let's say, a year ago, not many people knew or had heard of an NFT, apart from those, of course, in the crypto sector. Fast forward, NFTs are being sold for gastronomical sums, and the explosion has been huge. I mean, we can talk about the Bored Apes that was sold for $3.41 million, Jack Dorsey's first Twitter that was sold last year for $2.9 million. I heard it's now been put on OpenSea, not really selling for a fraction of that, but anyway. And would you guess what the most expensive CryptoPunk NFT was sold for? Anyone can take a guess? No? $23 million in February of this year. So what we're now going to talk about is look at the state of NFT and if this utility is something also beyond the hype. Your Open Metaverse, which is abbreviated YOM, is a metaverse gateway platform and marketplace that offers brands and companies an alternative way to engage and interact with their target audience. And after meeting the co-founders of YOM, our next speaker became inspired by the potential of metaverse and Web3, and he took on the job as the managing director to help build an incredible business. And it says that his team call him Legacy Lex. Now, I'm going to call him by his birth name, and hopefully he can talk more about Legacy Lex and what that implies. So with no further ado, please give it up for Alex van der Ban.
Hello, everybody. Hello, Zook. Amazing to be here today with you. I'm going to talk with you about the state of the NFT market, utility beyond the hype. Is there a hype? Well, I've spoken to many of you today, also yesterday, and I think it's not really 50-50, but we'll see where we're going. We live in extraordinary times. I don't think I have to tell you that. Every industry, either financial, traditional finance or blockchain, we're seeing stuff happening really fast continuously. And that's happening, of course, also in the NFT industry. 2021 was definitely the breakthrough, the stellar breakthrough of NFTs. And some of you perhaps would say that 2021 is the dawn of the impending death of the NFT. My name is Alex van der Ban. I'm CEO of YOM. We are a startup in Utrecht in the Netherlands. We are building what we call a layer 1 metaverse. With our technology, we try to allow brands and creators to showcase their amazing content by the use of Unreal Engine to be broadcasted on all the devices. We do that with a team, and we're very excited to talk with you, so join us in our booth tomorrow if you want to learn more. So here we go. We're going to talk about the NFTs market. Ouch. I hope that I'm not hurting some of you here. I'm sure that there are a lot of crypto people here. This is a message that you guys might have seen last week. Quite a significant drop on OpenSea. But what does it mean? What does it mean if a Bored Ape goes down 53%? Does it mean that the whole NFT market is dead? Personally, and YOM, we believe that's not the case. I think you can see parallels with what happened in the ICO boom and decline in 2017 and 18. And what we've seen that all those companies that managed to stay around, those have been the true winners of the amazing run that we've seen last year. So what is the true essence of NFTs? Is it just art? I mean, you've seen some amazing examples here. There's definitely a great use for art. We believe it's about right of use, ownership, and access. And particularly when we're talking about the environments that our customers try to make, either to be retail environments or concerts, these three parts are very important. And what we're seeing happening in the overall industry is definitely focused towards these three topics. So the industry is maturing, but the NFT is still a baby. It's in its infancy state. And being all here professionals in this industry, it's our collective, well, we have to do it together. We have to raise this baby. It takes a village to raise a child. So let me dive into a showcase that we've done from YOM Labs. It's a part of our company that we use to showcase particular use cases. Meet Sam Ace, a young and inspiring DJ from the Netherlands. Before COVID, she did gigs with Martin Garrix, and she almost did a record deal with a big company in the Netherlands. But just before she did, fortunately, we managed to make her in-house DJ with YOM. What was the reason for her not to sign that record deal? She had to become a DJ for 10 years. She had to get a lot of revenue in, and if she wouldn't, she had to do loads of gigs in order to make that money back. And it's very difficult to negotiate everything. So what we did is we said, we have to validate, and if she becomes our in-house DJ, we can do that without the lawyers. And that was very useful. So we started off making an avatar. She's still doing, of course, a lot of offline gigs. And every time she's doing that, she's doing proof of attendance tokens. And right now, we're gathering a lot of information, a lot of wallets. And at a certain moment, and we expect it to be somewhere in the next 2 to 3 months, when we've reached enough conversions from wallet IDs to actual names and email addresses, we'll start selling a 4,000 NFT collection, 50 euros each. That will get her 200,000 euro, which will get her first EDM record. Completely self-done, and it will show the power of Web3 for young and aspiring artists. But how does that look like? I mean, the metaverse, these 3D environments. Well, we did a little clip to give you a bit of an understanding of how that would look like. Take a look. So that to us is at least one example of utility beyond the hype. Use cases that I believe, that our team believes, that you will see a lot more over the next time, next months and years to come. Thank you very much. Hope to talk to you very soon. Bye-bye.
Thank you, Alex. Interesting utilization of utility. So we're going to stay on the topic of NFTs. And we're going to look at real assets as we now transition to a panel on the theme, The Future is Phygital. Now, many of you probably know what this terminology means, but just to emphasize, in general terms, it means, of course, the combination of physical and the digital for an enhanced experience. So when it comes to phygital and NFTs, this is basically, let's say, unique digital assets linked to the blockchain and representing a physical asset. To talk more about this, we have an eminent panel with a lot of knowledge, and I'm actually going to welcome back the man who was just here, so give it up again for Alex van der Ban and his panel.
Wow, amazing. Super good to be back here. It's been, it's been only a few minutes. So guys, we have a really cool topic ahead of us. And what I'm gonna try to do is do a quick introduction. And then we have hopefully at least 15 to 20 minutes and also a few questions. So ladies first. Andrea, tell me a little bit about yourself.
Hello, and thank you everyone for coming, and thank you to CV Labs and CVVC. This is our second partnership since Davos, and it's just as good as the last one. My name is Andrea Abrams. I am the founder and chief metaverse officer of Phygital. We are a consortium of founders, CEOs, and industry leaders, mostly in retail, fashion, and lifestyle, connecting the dots between digital and physical. I started this consortium a few years ago when we realized that there was a lot of disconnected conversation between the digital world I was part of, blockchain and digital fashion, and the physical world. I'm also the chief of strategy for Faith Tribe. We are a platform and ecosystem that open sources fashion talent. We were founded by a luxury fashion brand that has expanded the open sourcing methodology from the physical world for 20 years of doing it in the physical world to the metaverse, and we have our own DAO. So we'll hear about that at dinner tonight.
Perfect, perfect. Joel.
Alex. Hi, everyone. Good afternoon. My name is Joel Corrado. I'm managing director at Casper Labs. And yeah, I'll keep it this way.
Thanks. Roger.
Hey, great to be here. Thanks for having me on the panel. My name is Roger Haas. I'm the CEO and co-founder of Art Meta. I come with a traditional art world background, and we founded Art Meta to push the boundaries not only of the physical but also to bring together the traditional art world with the new digital realm.
Perfect. Monty.
Yeah, my name is Monty Metzger. I'm CEO and founder of LCX. LCX.com is a regulated fintech company out of Liechtenstein. That's why we have the L in the name. And we achieved to gain 8 regulatory approvals, all blockchain related. That's more than any other company in the country, based on the new blockchain laws, which had been in full force since 1st of January 2020. And the key products which are at our platform is, first of all, the LCX exchange, a cryptocurrency exchange. Second is a token issuance platform where we issue tokens on behalf of other projects. That's super fast growing at the moment. And then the third, which is around Phygital, is really tokenizing diamonds. So we launched a platform called diamonds.com. We can go check it out and buy physical, like real world diamonds, but tokenized as an NFT.
Perfect. When I spoke with most of you guys last week, we discussed Web3. And the question is Web3 just a simple evolution or is it a revolution? Shocker, everybody said it's a revolution. But perhaps one of the things that you told me, Monty, was we're basically shifting from an internet of information to an internet of value. And particularly with your project, can you elaborate a little bit more on that?
Exactly. So we are in this transition, and you're totally right. We are in the middle of a revolution because blockchain is to the money what email is to the letter. It's really a fundamental technology shift, and we believe that everything that can be tokenized will be tokenized, which means that every financial asset, all like physical assets as well, art, which we currently see already, but also commodities like diamonds or gold, maybe, because it enables global trade, global access, and has lots of benefits.
Perfect.
So the Web3 is really a revolutionary way which we are all in.
Cool. I'm sure most of you already understood after the introductions, but the nice thing, what I think about this panel is that we truly have people really bridging physical, traditional industries and showcasing what Web3 and blockchain technology can do. And one of the things, Roger, that you told me really struck out, and you said the traditional art scene that you've been a part of for such a long time has a massive risk of gaining more revenue with all the stuff that you guys are doing, because it's not just simply tokenizing digital items, but there's also a huge opportunity, you told me, for really fractionalizing and putting physical assets into the digital realm. Can you elaborate a little bit more?
Sure. Okay, I think this works now.
That's working.
Okay. You know, thinking of all the artworks worth trillions of dollars sitting in free ports and storage units around the world, you know, the big disruptor here will not be the galleries that, you know, are the mean gatekeepers who would prevent artists from making their fair share out of a sale. But the big disruptor here is really that you can see like all the art world participants and entities and players actually going on the metaverse and having the chance to actually directly, you know, trade and sell and buy, and this is really what will bring the big change to the whole thing.
Yeah, and shifting it a little bit up, Andrea, one of the things that struck out when I spoke with you is that one of the massive impacts of this technology is access in various forms, but this was something very close and dear to your heart.
Yeah, you know, I think when we talk about Phygital, there's a lot of noise now. People talk about physical and digital, but Phygital really means to us embracing the technology to solve existing problems. So I think technology should be used to solve a problem, not to create more cost and more and disrupt the process in the wrong way. I do think it is a time of transition that is really a revolution, because the kind of disruption that we're seeing is solving a problem that in my industry, as well as Rogers, we didn't have for many years, which is access. And so when we were talking about this, I said to you, when I see around the world, and my partner Wahid is here today, he'll tell you about this, if you approach him in the fashion industry, the hierarchies of the traditional business have made it very difficult for talent to sometimes be discovered. When I see extraordinary talent joining metaverse platforms and showing their work digitally and learning the technology themselves without those hierarchies, we know the revolution is here, because the same artists that we discover in Latin America without formal training can be on the same stage with the people who have 20-year careers in fashion. So we've embraced it and said, wonderful, now we can actually create a platform where you use the access that blockchain enables to give more access to all kinds of talent.
Amazing. Yeah, before I give the word to Joel, a small disclosure. We both come from the IT world. You've worked at Cisco, so I was very happy to see that there are other people in routers and switches and IP stacks. And when I spoke with you about this whole disruptive, you said you were sort of in the middle. You said it's evolutionary in some part, it's revolutionary in some part, but also coming from, let's say, a very traditional, nowadays traditional industry, not when we started it, but now it's traditional. How do you see those, those shifts and changes between the industry you came for and the work you're doing now with Casper?
Casper Labs is an enterprise-grade layer 1 blockchain, and when we spoke, I actually said it's an evolution and a revolution. So indeed, I was a bit in between, because if we think about Web3, I mean, the Ciscos of the world were coming from the Web2 in terms of knowledge economy, of building the infrastructure that is the internet today, that enables companies like Google and many others to evolve. But when we look at Web3 and decentralized networks, we actually see that there's different concerns. Concerns on how we manage information, our own private data. How do we decentralize things but make consensus mechanisms that can actually, with finality, actually change the world as we see it today. And actually, when we see about this evolution, for me, it's all about how do we manage the data. How do we as a community build something that is different from what we exist today? And in terms of evolution, we see many of the projects we do today, not as much in the art world, but we are looking into projects like tokenization of assets, of high value assets, or even what we are seeing today with industry, traditional enterprise industries, that there is a need and there is a request that we move into this tokenization so that we can continue to deliver on new business models and new revenue streams for them.
Perfect. Monty, diamonds, with diamonds, you're basically having a diamond-backed collateral NFT. And the first time when you told me, I was like, why would you want to do that? But then you explained to me that the diamond industry where you've been venturing into is a very opaque, very intransparent market. That if you're in India, you could have a completely different price for something than in Antwerp or in New York. Can you elaborate a little bit more about all the work that you're doing? Because also on the legislative part, you've been doing a lot in Liechtenstein.
That's right. So a key part here is really that with blockchain technology, we are eliminating the middleman. So that's why, like, picking up the topic of arts, it's really, it couldn't be a more exciting time now for an artist to be alive, because you're eliminating the middleman, the gallerist who sold the painting, or you sold the painting to them, and then they didn't profit anymore in future sales. Now, with the blockchain, they can actually sell the NFT and get a profit for every future sale. So if it's a big hype, and you're the new Pablo Picasso, then you will profit from it. Same in other industries as well. So with the diamond industry, we are also eliminating all these retailers. We bring in price transparency, and you can actually hold and own the NFT, which is one-on-one backed with a real-world diamond.
Actually, as we're talking about in a bunker, right, somewhere.
Yeah, as we're talking about this, Phygital is physical and digital. So this getting this bridge right, that's the crucial part of what we are talking about. And with the diamonds, we're actually putting it in a safe vault in Liechtenstein. We, the issuer, have to guarantee that these diamonds are in a safe place, that they're not stolen, that there's no debt on it, and that's a liable role. And we used the Diamonds.com platform as a showcase what we can do as a physical validator. Under the Liechtenstein law, the Blockchain Act, there's a role called the physical validator, where we applied for and we are eagerly waiting to get the final approval now, which is hopefully coming very soon. And with that role, we can also do it for other projects as well, where we act as kind of a notary, making sure that the underlying value is there. So if you take art, it needs to be stored in a safe place, specific temperature, whatever, it should not get wet. If there's like other assets, it's the same question. How is it safeguarded? I've seen tokenizing wine or so, you need to make sure that nobody drinks it and you don't, that it's not falling on the floor or something like that, bottle breaks. And I think that's why we chose diamonds, because it's easy to store, value is very high even if they're small, and it's perfect. So for all of you, you can get into diamond investing, which has not been so easy at the moment because the middlemen are basically managing the market at the moment.
And basically,
we are really disrupting the industry.
Yeah, but so basically, I mean, if it works with diamonds, it can work with anything.
Yes.
So Roger, with Artmeda, can you elaborate a little bit more about how you try to disrupt this art scene? Because you mentioned that there is a big difference between the traditional art scene and what you're doing today. At least it's a little bit faster, you told me?
Yes, crypto is a little bit faster than the traditional art space. It moves a little bit faster.
Yeah.
That's true. Yes, as I mentioned before, the real disruptor here is that, you know, all market participants can actually talk directly to each other. There is no intermediary. There is no one in the middle that takes a cut. And also imagine, you know, you can even think of if you always wanted to be a gallerist, you could actually try that in a metaverse and go there and do things there. And you might even become a gallerist. You know, this is really opening up. But having said that, you know, I don't believe that the gallery as a model is disappearing, because as a former gallerist, I can very much appreciate what a gallery actually does for an artist, establishing relationships with institutions, museums, curators, other galleries, you know, really building a track record for them. So I think, but the model of the gallery will probably change, and it will change in and through the metaverse, through Web3. So I think this is one thing of the disruptive part of it.
Thanks. Andre, you've told me, I mean, you're a very busy lady. You've been, you have an amazing CV. You've been involved with Polkadot. You have been in the retail industry. Now you're running, I believe, 2 teams over 3 continents. So we're very happy. You just flew in from New York. One of the things that you told me when we were talking about this whole Phygital and the term about it was the concept of multiple identities, metaverse identities. Can you elaborate a little bit about that to the audience, what you mean by that?
Sure. I think, you know, when you look at retail and fashion, I always say you have to go back to the fundamentals. When we saw the transition to Web 1 and Web 2, there was a time when we had fashion and we had retail transactions and retail activities and activations to sell product without a digital component. If you look at what created success, a lot of it had to do with understanding who your customer, or nowadays we call it community, is. So I talk to a lot of retail CEOs that I've known for a long time, and they're fretting over how to enter the metaverse. And so it's not about entering the metaverse, it's about the fundamentals. I got in the space for the same reasons that we've been discussing, which is authentication and traceability of products. So if you look at the problems in inventory management and retail, that was something that the retail industry was suffering from. But then there is another problem, which became a little bit more evident during the pandemic. How do we sell and activate product? How do we relate to each other in a human way when we're all in New York, not even able to leave your home to go to too many places for a while? And I think those of us who were in the space since 2018, dabbling with the retail product, realized that we needed an event, a geopolitical event, to force everybody to say, okay, why not? Why don't I become a gallerist? Why don't I try to show this collection that I cannot show in a physical form? If I can digitize it, maybe a department store or a buyer will look at it. So we started to see that people interacted with our product differently online and with Web 2. And then we saw in the metaverse, people interact differently. So I talk about selling to your physical identity and your metaverse identity. And I tell all the retail friends out there, your industry just got, your customer base, your market share just grew, because you cannot necessarily sell to me some of the things you sold 20-year younger version of me in the physical world. But in the metaverse, I can have multiple identities for multiple activities, and I may buy different type of product. So don't just pigeonhole yourself into thinking that you're selling the same product to the same people in the physical world as you do in the metaverse. And we're experimenting at Phygital with a lot of different platforms. So we work with all the platforms. We work with Decentraland, Sandbox, Roblox, even not all on chain. So gaming, I think gaming is going to do a lot of good things for retail. But again, fundamentals, strategy. What are you selling and who's your community? One thing has changed in the world, and this is not just because of Web3. I think we were going in this direction, and it is the building of community. So understand the shared values of the people you want to engage in that product or in that art gallery, because that's what's creating a lot of amazing partnerships.
So we're basically talking about the bridges between a traditional industry or industries and what we're seeing happening in blockchain and Web3. However, today we're in Switzerland. A few days ago I was in Netherlands, you were in Liechtenstein, and we have laws. I think we even have people in this room that are working every day on creating these laws. But the laws of the land is also sometimes, keeping at least our techies a little bit frustrated. How do you guys look at the rule, the compliancy and the regulation, and how does it sometimes frustrate? We all understand that it's necessary. How do you look at regulatory stuff, Joel?
I see that, the last 10 years I've been working a lot in the space of smart cities. And when we develop solutions for governments or for cities itself, we do realize that technology moves much faster than public policy. So public policy needs to be implemented first in order to have a proper adoption of technology. And that for cities and governments is a barrier in a way. Some countries or some cities might be flexible and we can do things, but you will always have that challenge of regulation. We see this, for instance, in the finance space. We are working in that area as well today, and we see that some countries have already established legislation that allows us, from a regulatory standpoint, to implement some financial solutions, tokenization of assets into finance assets, and with that way, piggybacking on that type of regulation, we can actually implement and do projects.
But the spectrum that you guys are working in is not just here in Western Europe and entities, but I believe you're also working in China, in a lot of other geographies.
Yes.
So the fact that you guys, as a more corporate blockchain company, can also leverage your technology in these geographies, that means that they really see the added value there.
Definitely. And in the case of China, for instance, we have adopted the Fuzhou chain in the city of Fuzhou. And in that sense, for instance, China is a highly regulated country with regards to the blockchain. And the Casper blockchain, for instance, matched all the checklists with regards to the implementation in the city for the development of government services. But we see the same in Germany, for instance, that we are already aligned with our joint venture of Nucleus Finance together with Ariadne, which is a banking software company. We've built a joint solution for banking solutions. And for instance, in Germany, we have been able to continue to develop solutions there. Although there is legislation, but we've been able to match it. Yeah.
Roger, how do you view this point?
Yeah, it's already a big controversy in the traditional art space, in the physical space, thinking of all the free ports, the money laundering topic, which is actually total nonsense. But not going into that. But
we only have 8 minutes left.
But imagine you have a Picasso painting in a Delaware Freeport, and there is a buyer in London, and the UK government at some point they want to make sure if the physical asset, if the physical Picasso painting stays in the Delaware Freeport, but the token goes to the next wallet, they want to make sure they get their cut. And I think the governments are still overwhelmed with the topic, but this will definitely come on the plate sooner than later.
Monty, Liechtenstein, what you told me that they're actually quite ahead.
Yes, absolutely. I mean, they had been thinking about it since a long time. Also, probably personally, the Prince family has one of the largest art ownership in Europe and the world. So they want to make sure that they enter the next age of kind of wealth and finance. So that's why they looked deeply into that. And the key part is really to get the regulatory approvals right, but get the balance between innovation and regulation. So I don't think that regulation has to come first. It's really driven by the industry now. Everybody here on stage is pushing some form of a product, and then we can guide it. But what we need as an industry are people with integrity, trustworthiness, and make sure that if we have asset-backed tokens and asset-backed NFTs or something, then this bridge between physical and digital needs to be managed the right way, even if there are no laws. We in Liechtenstein, we are lucky that there is the Blockchain Act and we can follow this path. So all investors and people joining there have security and clarity. Also for us, as a company doing that, it's important. But all the other countries are now learning, so we see that a lot of things in MiCA regulation are now taking from Liechtenstein as a role model, and that's great. And I have to say, this might be probably the most exciting or most important panel at CV Summit, because the next growth phase of industry is driven by NFTs and tokens which are asset-backed. We've seen tremendous layer one networks going out. We have Cardano, Ethereum, which is emerging tomorrow. And so I think the infrastructure layer is there. We've seen meme coins from Dogecoin to whatever. And we also seen a lot of payment tokens which are thriving, so digitalizing money. But now the next growth wave is really about tokenizing physical things, bringing them on blockchain, having all the benefits with ownership transfers, really disrupting many industries which we can't even imagine about.
So as Olaf said in his talk, let's end on a positive note, and then I hope that I can give at least 1 or 2 questions. Innovation is key, and NFT is much more than just art alone, or what we've seen happening on OpenSea and other platforms. Can you perhaps quickly give your views and vision to the audience, how you see this space will basically mature and the opportunities that lay ahead? Monty, starting with you.
Yes, I think you have to eat your own dog food. That's a saying from Google. So you have to test it, go in every nitty-gritty detail of it, and you have to get it right. So that's why we developed everything from scratch. We built our own kind of OpenSea NFT marketplace for Timons. We know how to issue tokens legally, but technically also. And at this point of time, there's no solution you can just take out of the shelf. You have to do the hard work. And we've done it for a long time, and now it's coming to light step by step.
Thanks, Roger.
Yeah, it's kind of the same for us. Where, trust is very key, and especially for the art world. That's why we're building an ecosystem with ecosystem partners to build that confidence. Among that are logistics providers, insurance companies, banks, galleries, museums, because that's really key. You need there's the curation aspect to it, and there is the ecosystem aspect, and you need to build that, and to make sure that people feel safe and confident when they actually come into your platform.
Great, Joel.
From the layer one perspective, I would say that our objective is to adhere to the latest standards of NFTs to continue to build an NFT that is robust, secure, scalable, and also at the same time programmable. So we are very focused on programmability in the NFT so that with time, you have something that can evolve with your business. And I think that's the message that we're looking for.
Amazing. Andrea?
I agree with Monty and Roger. Trust is key, and the ecosystem has to be curated, and I think adoption and success will come from clarity, as we said this morning, and I think a lot of what we focus on with Faith Drive is showing a community that probably has the same issues as the art community in terms of trust, that these are people who have been doing it in the physical world. There is trust, there is financial structuring, and I think if there's a token component of what you're doing, there needs to be done with a lot of clarity, and it needs to be done the proper way. In the product world, everything we've heard today about, a token backed by a physical product is not physical and digital. It needs to come together. Why are they together? How one validates the other? Otherwise, you're just expanding the problems. So I really do think the clarity will emerge soon, because I think much like with Web 1 and Web 2, there will be a lot of the noise that will disappear organically. And I do think we're just seeing the beginning. In art, probably the same, but in fashion, we see a lot of adoption of AI tools. What we're seeing now is interesting and it's great, but the tools are so nascent. The best is yet to come.
Clarity, trust, and doing it the proper way. We have 1.5 minutes to the audience. I'm not sure if anybody here has a question. If I see a raise of hands, then I can do my best of throwing this microphone. But I don't really see any questions, so that must have meant... Oh, there. Yes.
Thank you.
Please.
So I have a question for you, Monty. In terms of ranking, where do you see LCX in 2, 5, or 10 years?
Yeah. So we started very early, like 4 years ago. We've started with the platform, and we have a long-term view. So within the next 5 to 10 years, we want to sit here again, welcome you all, and talk about all our successes. And I think that's already like an achievement. If we be there, we have to grow, because the whole industry is still so small. And therefore, our vision is to become a key player globally and bringing all the knowledge from Liechtenstein to the world.
Thank you so much. Thanks so much for your attention. A great round of applause for Monty, Roger, Joel, and Andrea. Thank you so much.
Thank you. Ooh, there it goes. It was close. Thank you. And thank you so much to the panel. And what a great panel. Hopefully also the word clarity that I used at the beginning, this gave more clarity to you. So next up, we're going to look at the tokenization of the physical world. Now, according to research and analysis from institutions like World Economic Forum and Deloitte, a large part of our future economy will be driven by the tokenization of both digital and physical assets. And we're talking that it will grow to slightly more than $3.1 trillion by 2030. And according to our next speaker, tokenization and DLT is a game changer for commodities, the commodity market. And he's going to explain why. So a bit about our next speaker, Marco Grossi. He has 20 years experience in treasury and investment banking. And for the past decade, he's been focused on cryptocurrencies, tokenization, and blockchain. And today, he is CEO of Eternyze AG, who facilitate the tokenization of commodities. And a fun fact about Marco, I learned, is that he loves to play guitar and piano, and he has a big collection of CDs. 10,000 CDs. So what happened when digitalization came along with Spotify? Everything is for free. So that is why Marco has moved to blockchain to digitize commodities. So please give it up for Marco Grossi.
Welcome to Eternyze, digitizing and tokenizing the physical world. Here I am. So today I have 7 minutes to bring to your attention a big project that we have in the physical world. Especially for our first use case, it's base metal and precious metal, the tokenization and digitization of that. I have 3 topics. First of all, to bring to your attention who we are. Second, the ecosystem that we have built. I have heard before that ecosystem is a key topic to make this happen. And the third topic is to give you an example of what the real benefit is. We started in December 2018, and we created our own Hyperledger Fabric platform together with IBM in the very early stage. And after 2 years, we could already launch our first industrial token transfer. Means that this business now is going into billions of metal underlying. And this is real. So we have big players already onboarded. Shortly afterwards, we entered into the custody business, where we digitize the custody and make it possible for a client to use our technology and bring the collateral to list the exchange-traded commodities into traditional exchanges. So these partners listing into various exchanges in Europe using our technology, where we prove that the metal is in the warehouse. This was a very important steps, including the next one, where we could achieve the membership of SRO here in Zug, that allows us to grow in clientele. And our big success was early 22, where we could onboard different participants like Glencore, which is in Zug, one of the biggest players, IXM, StoneX, William Rowland. So we are here, and the next steps that we want to achieve, we are about to create or to launch a full metal bar token, ownership token. It's very soon, and we are in the preparation phase to get the appropriate licenses in Switzerland to be able to trade and issue tokens, digital assets. In Switzerland, the security firm having an organized trading facility. Now, our business case. Tokenization and commodities, for us, it's a game changer. So we see 3 big factors here. Digital allows to transact in a new way. In a new way, over one single source of information, where partners can maintain, record, and transfer immutable metal data, where we can attach any sort of information, including ESG data, CO2 certificate information, where we work with different registries, where we're about to work with different registries and different frameworks provider. Here in Germany, so in Europe, there are some projects where it's needed to have a regulatory data source that we can also attach here to the token. And this is in a secure and distributed way. Our big aim by doing that is to bring the industrial and the investment world into one platform and have the opportunity for our clients to use either one or the other. It brings a lot of benefits. And the benefits can only happen if the whole benefit moves with us. We have created this ecosystem to make this thing happen. So you see, it's rather complex, but we need to have all of them to work with us. So we have on the left side, banks, insurance companies. We have physical storage provider, very important commodity supplier, commodity broker, pricing information, very important, the ESG data provider. We're not creating our own data provider, we need to work with partners. Physical delivery, there is a process behind it. So either we bring the clients on our platform where it makes sense and where it's possible, or we have to link with them in any sort of possibilities. And being in the middle of the left side of the economy, by having our services like tokenization, where we have a marketplace to trade those, or the auxiliary services where you can have metal custody, client trading possibilities, and link that to the participants on our platform that are either industrial clients, investment clients, or institutional clients that needs to have commodity exposure, price exposure, or just need to have the metal safely stored for collateralization of any type of things. One concrete example of that I want to bring to your attention. Let's assume that a mining company creates a metal bar. We can tokenize that metal bar. We can add different type of data to that, and that metal bar can be sold to a producer. The producer, being on our platform, has the possibility to use that metal for the supply chain, and sell it to the next in the supply chain, and also create a certain type of circular economy, because through tokenization, by having proof of provenance, CO2 footprint, track and trace, we can guarantee that if it's recycled, that we are back at beginning. But if the producer wants to sell, because the market maybe it's more opportune, wants to sell it into the investment world, they can do it on our platform, because we have enough licenses and are enough regulated to provide a primary and secondary market. Means that the participant on our platform has a certain flexibility and optionality within the supply chain and change from supply and investment world. So linking the industrial and the investment world together. Conclusive words. Our platform is real. These are our partners. So you see you have big names there. We have banks there. We have storage providers there. And we have the technology partners that supports us. So what I want to say conclusively, tokenization and commodity is real. I hope to be here next year and to have the next success story to tell you. Thank you very much.
Thank you very much, Marco. So with that, we've looked at NFTs, we've looked at Phygital, we've looked at tokenization. Now we're going to move on to DeFi, decentralized finance, and its potential beyond speculation. Now in DeFi, one can say that power is distributed, systems are open source, technology and data are transparent, and innovation is continuous and open, meaning no rent-seeking monopoly can exist. Now, to talk more about this, I'm going to say a warm welcome to Noreen Mustafa. She's head of exchange development at Lightcurve. And Lightcurve are building the world's most accessible blockchain application platform called Lisk. Unfortunately, Noreen couldn't join us here physically, but she's joining us here live via link from Australia. So let's see. Noreen, are you with us?
Hi, yes.
Perfect. Now we
Thank you
just see
so
you on the
much.
big screen, and I hand over the word to you.
Thank you so much. Well, I love the introduction from our lovely host. And I would like to start, guys, is there any echo? Okay, so I think we can start. I would say that my presentation or the talk actually has three parts. So what is DeFi? Then how has DeFi passed speculation, or is it still? And what's coming up for the DeFi landscape? And it starts with the fact that still we are new in the industry, that we still don't have any agreed definition of the DeFi. It's just like that it is a word that we use to refer to financial services based on the top of decentralized infrastructure, and they do not rely on any kind of financial intermediaries like central banks or the commercial banks. The long-term value and the relevance of the cryptocurrencies and other digital assets are still up for debates among the masses, with opinions still ranging from another Ponzi scheme to the banks or bankless or digital society has officially begun or not. So our mass is still confused. Yes, we have a good awareness among certain group of the people, but then mass adoption is still something which is coming. But right now it's like kind of in the phase where we are trying to adapt to our new society. So actually, stakeholders and other institutions, especially financial institutions, they are trying to find a sweet spot between the treating DeFi as an existential threat to the banks, or maybe an opportunity for all of these stakeholders like the banks or the real estate investment trusts, or maybe S&P 500 11 sectors. However, there is no denying that in the past few years, this new and developing ecosystem has firmly established itself in the general public. In April 2022, according to this study by blockchain data provider Ember Data, the total value locked in DeFi has increased to US $239 billion, which is 40,000% increase. And this happened just from the beginning of 2020. So this increase actually has compelled all the institutions, including financial institutions, retail, banking, many other sectors, and their authorities to actually quickly comprehend, evaluate, and answer to this adoption phase. So there is no denying that in the past 2 years, this new and developing ecosystem has firmly established itself in the general public, and DeFi has passed the stage of being passing fad. So now, what is beyond the speculation? I would say that all these financial institutions and the S&P top 500 sectors, they must carefully evaluate two essential things in order to position themselves effectively in this quickly changing digital asset economy. Since DeFi has the potential to bring about major changes in the global financial system, therefore this DeFi wave is even more crucial for the central and the commercial banks. To begin with, they have two options. Number one, to choose to play or sit things out, with either option being a valid business strategy, as long as it is a deliberate and informed decision that is constantly evaluated in the light of development. Number two, keep an eye on the regulatory activities in this field, as may impact risk and the opportunities in each sector. For example, products like crypto savings, deposits, crypto payments, crypto-backed loans. These are the examples of the real-world applications that has really shaken the roots of our financial industry. These products are typically provided by unregulated or kind of semi-regulated fintechs that specializes in the crypto. And on the other hand, banks and these institutions are fully regulated. So both of them have the opportunity to partner together and help enable access and offer new services for the customers. And they can offer these crypto platforms and banks come together to support services for the DeFi platform, for example, on-ramp currency, off-ramp, digital identity, and so on. They can similarly, we have an educational institutions that can also take a part in this revolution, and they can play their role by influencing the role in the role of the crypto and DeFi and its importance for the masses. And our legislative institutions, they can always come up and do these legislations at a bit faster speed, because we are innovating so much fastly in this space that we need a bit more speed in the policy and regulations. Well, as you guys are following, we have a good news that many financial institutions, and which includes, like, for example, Charles Schwab, Citadel Securities, Fidelity Digital Estate, and several other venture capitals, they have came together and they are trying to launch their own decentralized exchange. And this is right now, they are doing it for US financial markets, but this kind of the step is a guiding step for all other countries, all other nations to think about this kind of the revolution and develop their legislations accordingly to help masses to take the advantage of the technology. I must say, such adoption has actual potential to remove operational inefficiencies and cash holdings and instant payments, withdrawals, transfers. It has actually potential to accelerate the speed of operations in the financial and the retail industries. And at the end, I would say that we at the Light Curve, we are developing the world's most accessible blockchain platform just for the purpose of these things, so that our people, our community can join us and they can develop on the world's fastest blockchain, world's easiest and most accessible blockchain. And therefore, we are actually supporting our community in three ways, actually. So number one, we are offering them a very friendly, developer-friendly SDK, on the top of which they can develop any kind of the DeFi tools related to on-ramp tools or whatever, crypto lending, borrowing, whatever do they like. Then we are offering them professional guidance and mentoring on how to use our Lisk SDK. And then at the third, we are also supporting them with funds to support their project. And this also is happening through our Lisk grant program. And if anyone wants to know the details, you can always get back to me, or maybe simply just visit our lisk.com lisk.com website, and you can see that, okay, here is our grant program, and we always are very welcoming, and you can always contact us regarding Lisk grant program, and we are happy to help everyone for this particular task and help you guys to innovate in the DeFi space. And I also appreciate your interest in my keynote speech, and I'm happy to answer anything about the DeFi landscape or Lisk program, grant program, or Lisk blockchain in general. Thank you so much, everyone.
Thank you so much, Noreen. Does anyone have any questions for Noreen? Any questions? No? Noreen, I'm sure you can hear me. Thank you so much for your presentation, and we hopefully can see you here at CV Summit next year. So thank you very much.
Thank you so much.
So before we go on to our panel, I just want to once again, invite you to explore everything that we have outside of here once we go to break, because we do have an amazing NFT gallery. If you haven't been there, please check it out. There's so much happening there with NFT artists and everything. And then we have the metaverse. And then if you go upstairs from there, we have all the startups and all the founders and also our partners like Google, Visa, Citibank, and so forth. So, if you want to meet them or find out more about the startup scene, please don't miss that opportunity. So it's now time for a panel. And we're going to talk about the state of Web3 tech, layers 0 to 2. So in this panel, we're going to explore the core foundations of blockchain technology. The panelists are going to dive deeper into blockchain's architecture, focusing on the core infrastructure technologies, including layers 0 or 1, 2, and explore the relationship with these technologies and the Web3 innovation trajectory. So for me to present the moderator, it's a great pleasure. She is Danny Rose Handel, who is a venture partner at CVVC, and she's also an expert in startup acceleration, Web3 applications, and alternative asset investment. So please give it up for Danny and her panelists.
Hi, everyone. Thank you for joining the panel here. And I'm very glad to actually welcome everyone here. I have a great group of panelists that I have the honor to share the stage together with. So Cheyenne is here, the chief strategist at QPQ Global. Manu, the head of platform development at Lisk. Joe Petrosky, who is part of the Common Good Parachains team, lead at the Web3 Foundation, and Eric Demora, who is the CEO at Cartesi. And today we will discuss the state of Web3 technology, focusing and diving deeper into layer 0, 1, and 2. So I can imagine that some of the audience sitting here is not really clear about those definitions pertaining to layer 0, 1, and 2. So perhaps we should start with defining that specifically. So who would like to start with trying to define those different layers?
I can go. So the way we think about layer 0s at QPQ is that we think about it as Reaper. So first you have layer 1s that provide all the resources. They provide consensus, assets, and smart contracts, and so on. But layer 0 is the infrastructure that allows people to build businesses on and access all of those resources. So you can kind of aggregate all of that capability out there. So you have resources, infrastructure, and then you can build platforms and applications on top of it. So yeah, layer 0 is not a blockchain in itself, but it provides all the pieces to access all the other layers.
Yeah, so not to completely
tear apart the context of this entire panel, but I actually see that what you described is more of what I would call layer 3, which is off topic for the panel. But I see layers as going like they provide some sort of context to the layer that's above them. So if you are on layer 1, you should always be able to ask a layer 0. You should have some kind of shared understanding of finality or like execution context between each other. So if two layer 1s want to interact with each other in a trust-free manner, they could ask a layer 0 that they're both connected to, hey, which block is final? Like what context do we agree on? What context are we evaluating each other's messages in? So if you have like a bridge between two different blockchains, I think we kind of all saw this summer that you can't always trust the messages over those bridges because you could receive some assets over a bridge, but then those assets on the sending side could be compromised. And now you need to know, well, do I really own those assets? Do these wrapped assets where I am actually make sense anymore? And so if they're actually connected over a layer below them, like a layer 0, they can actually interact in a trust-free way because they have some shared understanding of what is final. So you would never have a scenario where two layer 1s who are on the same layer 0 would have one of them reverted to a state that's prior to another one. So you never have to worry about your assets being lost on an origination chain. So you can always trust message provenance and that messages will be acted on in the way that you expect. And likewise with like a layer 2 on a layer 1, two layer 2s on the same layer 1, they can share the same context about knowing what is actually final on the layer 1.
Yeah, just
go ahead.
Yeah, adding on top of that, I think maybe just to go back a little bit, what Web3 means, like to understand like what Web2 is. All of you are familiar with like the OSI model, right? So how the applications are built right now are kind of going to be built on Web3. The infrastructure that we are building now is what Web3 is about. Like all the layers that Joe talked about is the infrastructure that OSI was established. On top of that, like how you developed all the database, data layer applications like Twitter or Facebook or anything that we have today right now. So what we are trying to establish here is the layers for this and to build on Web3 for the decentralized applications.
Yeah, that's been a good introduction, I think, to kick off the discussion on layer 0, 1, and 2. And I think connected to that is often the discussion within blockchain technology, which is the blockchain trilemma, right? Which was coined by Vitalik, the founder of Ethereum, stating that there are 3 pillars for blockchain infrastructures, right? Decentralization, security, and scalability. And big challenges that different blockchain networks have is that they're only able to satisfy 2 of those conditions and one of them suffers. So what are your views in relation to those solutions that are out there today in the Web3 space and how in their capacity to address that specific challenge? Eric, perhaps you can start off.
I like to think of the trilemma problem by evoking a metaphor, right? If I go to a bank and I have 20 cashiers and I have a queue of people on public blockchains, monolithic chains, it's just like each user is going to the 20 at the same time, one by one. So it doesn't scale, right? And in the case of blockchains, even worse, because you have a single CPU core, in the case of monolithic chains like Ethereum, that have to supply computational power to everyone, all the users and all the applications. So we like the approach in which we use the blockchain, the consensus layer, as a very secure, very decentralized layer, but you don't abuse. We have to use it with parsimony, right? So one approach is using optimistic rollups, for instance, which is what we do, that we resort to the blockchain as a Supreme Court in case of disputes.
Could you explain what that is for those that maybe are not familiar with that?
So basically, if you're using a chain like Ethereum, every single transaction and computation is going through all the nodes, all the full nodes. So as I said, it doesn't scale. And we saw that happening in very interesting ways back when CryptoKitties was launched. A very simple game, right? It was as simple as tic-tac-toe, and it put down the entire network. So the approach of optimistic rollups is basically you send transactions in a compacted way to the blockchain, and you do all the computation on a separate system, on a separate layer. And assuming that computation will go well, someone will inform the truth back to the chain, and normally they will do. And only in the rare cases that there is someone acting in a fishy way, then the blockchain is used as Supreme Court. So you're not using the scarce computational resources of the blockchain to do all the computation and running all transactions.
I mean, you guys all are working on different capacities, right? Some of you are involved in the layer 1 side, the layer 0 side, addressing these different challenges. So perhaps you could start off with another angle.
Yeah, sure. I think Lisk is a blockchain application platform, kind of enabling the Web3 infrastructure in the sense that, like, we are building layer 0 and layer 1 solutions. What I mean is that, like, we are have the interoperability solutions where you could have your own self-sovereign blockchain applications, right? And then you could have as many blockchain applications you want connected to the Lisk main chain. And in the future, we are kind of bridging to the other protocols like Ethereum in the coming years. So solving the scalability is, as I think Joe and mentioned about, like, having the protocol neutrality, meaning that, like, having the ability to interact with different protocols is key to have the shared security. And yeah, I think from Lisk's point of view, I think we are having the interoperability as a solution to solve the scalability problem.
Yeah, Polkadot has like a very opinionated approach to how we solve this trilemma, and I would even say like decentralization is very fuzzy as a concept, but we decided on the pre-call not to go too much down that rabbit hole. But just one of the general principles of engineering is that if you can isolate and modularize things, you can design each component better and make them interact in a better way. And that's really what we've tried to do with Polkadot, is like the relay chain, like Polkadot itself just defines this abstract definition of what a blockchain is in a language called WebAssembly, which is a very general purpose language. Like if you've ever used like Google Meet or Zoom in your browser or something, it's running on WebAssembly. It's very well maintained for 20 or 30 years. And we just say that, like, hey, a blockchain, it's not even an EVM, it's not smart contracts, it just has like some state and some program of how that state changes. And you can connect a bunch of different layer ones. And these layer ones, like Eric said, they're basically like, they're a virtualization of a single CPU. So they can run these programs on the CPU that is a layer 1 blockchain. And but instead of having like everybody try to use the same layer 1 blockchain, we just say like, okay, well, we have like a bunch of like execution cores where we can take some validators from Polkadot and assign them to this core, and they're dedicated to that that single layer 1 blockchain. But what the layer 0 does is it provides the security level of saying like, okay, we all share some context. We all share like an understanding that we are at, block height 100,000, and that everybody is at this block height. Nobody has been attacked and reverted, because you'd have to attack and revert the entire system. So everybody can execute their layer 1s and get this scalability by adding more and more layer 1s while maintaining the security and decentralization of the entire system.
So I think if we look at this at a different angle, why does it matter? Ultimately, it's about projects being able to use ones that where the blockchain trilemma isn't an issue. The way to do that is actually build on the strengths of all the chains. So if you take consensus, for example, why take consensus from one place? It could go down, or it has issues, so it might be too centralized. So what we've built is a consensus as a service. So you can actually take consensus from, aggregate all of this capacity, and it's available. So this is how you're getting decentralization by actually using all of the chains, and you use it using different contexts. So for example, if you want to do payments and it needs to be within 2 seconds, you use certain layer 1s for that. But if you're moving a high value asset, then you use different chains for that. So you're getting decentralization by using the strengths of all the different chains, and in that, through parallelization and other methods, you also get speed and security. So yeah, that's how we think about it.
I mean, so far we've been discussing the architecture of blockchain technology, right? The foundations for which businesses can also build decentralized applications on top of those blockchain infrastructures. So leading into that, looking into these applications that are being built, on these networks, these different networks that exist today, such as Polkadot and Ethereum and Solana and others. What are some of the user experience challenges that we are experiencing so far? And do you believe that that is a single problem, or are there is it a multifaceted problem that is hurting the experience so far?
Yeah, I mean, I think the experience so far mostly comes down to just the maturity, especially around the tooling and the protocol levels. There's been a lot of changes, a lot of new protocols, and there's just not like a really mature tooling suite that application developers are used to using. And nor are a lot of people used to building Web3 applications in general. Like the companies who succeeded in Web2, like Amazon and Netflix, and Facebook, they weren't the companies that were very active in Web 1. Like a lot of companies in Web 1, like they tried to just move like a newspaper onto the internet, and those companies didn't succeed. It was a whole new wave of media companies that succeeded in Web 2. And I imagine that there'll be a wave of Web 3 native companies that actually create something that's completely new. I'm actually very much a user experience optimist. I think user experience in Web 3 will be much better than in Web 2, especially because Web 3 provides certain guarantees about the data and systems that you're interacting with. You don't have to trust Twitter. You don't have to trust Instagram. Your data is not in some silo. And you can kind of like, to make a concrete example, when you meet somebody, you have this like awkward phase of like connecting with them on like WhatsApp, LinkedIn, Instagram, Twitter, Facebook. Like it's silly to have like, you have like one social graph and you have to make the same connection 5 or more times. And you could have a single social graph where you just make a connection one time with somebody and say, well, this is social or professional or both or whatever. And you can build hundreds of different applications and user experiences on top of that. And everybody gets the guarantee that they're interacting with the same social graph. And I also don't think that like Web 2 is just somehow the epitome of user experience and like we've figured it out. This is what user experience is supposed to be. And so I don't think that people will necessarily like cling to Web 2 user experiences and not learn new technologies. So if you kind of back up like even like 20 or 30 years, like, and think about a QWERTY keyboard and a mouse, like this is not the most natural tool to use. Like maybe it is now because people are so used to it, but like I had to take a typing class in high school. Like that was part of my curriculum. And I know that like my parents and their friends actually like took time off from work to go to a class to learn like how to type on a keyboard. Like there were typing classes. And it's not because it was the mechanical keyboard didn't dominate computing because it was a great user experience. It sucks as a user experience, but people were willing to invest the time to learn to use that tool because they recognize the power of computing. And I think when people recognize the power of Web3, they'll be willing to learn to use new tools to engage with different types of user experiences.
Eric, what's your perspective?
Yeah,
I mean, there might be also a learning curve involved, right, for new users, and especially if you were to say older users, right, that are maybe less familiar with adopting new technologies. So do you share the same angle as Joe has, or do you have a different viewpoint?
I share a similar angle, and I'm actually eager to see things going beyond the first wave of successful NFT and DeFi, right? I think those are the early experiments in Web3. There is a huge promise that Web3 will provide better businesses and more better distribution of power to everyone. And we want to see decentralized networks like social media, decentralized and other applications that are more sophisticated. And I think when you talk about UX, I think we also need to unblock the problems that developers have nowadays, right? Interacting with blockchains from a developer's standpoint is really, really hard. And the EVM, for instance, is great and to do several simple applications like DeFi, NFT. But once you need to do more complicated stuff that's similar to Web 2, we need to move on and have something that has much more computational capacity and also for developers, more tools and more components and stacks for them. That basically touches what we do because as we can scale computation to tens of thousands of times compared to the blockchain, you can run, for instance, an OS like Linux. And instead of using the EVM and the developer having to program using a standalone language like Solidity, now they're able to use the world of open source, right? So that's a big step. So by reaching this level of computation, you can unlock this. So I firmly believe that once it's there, then we can have new kinds of applications that weren't possible. And then we're going to see, that's going to have a deep impact in how people are going to use Web3.
So I think there's all the technical stuff, but the reality is that if you take just two personas, right? So if you're building a project, you decide you want to join Web3, which is the other 99% who haven't joined. Right now, they need to choose where to deploy on. And that's a big stress. You need to choose one chain. There's no one chain that has more than 10% at best. So you're already limiting yourself to one place. And if you want to be on many chains, you now need to find different developers and deal with different security risks. So the way I think about it is like you have to operate different supermarkets in different towns and use marketing to that local place. So if we want the other 99% to join, they need to join Web3. And you need to make it like an Amazon experience where you're building in one place and you can reach the whole market. So that's the business side, and we're not there yet. And that's something, using a layer 0 approach, we're trying to approach. And at the moment, we're consolidating the EVM chains, but that is just 40% of the market. There's still another 60% who do different languages. And as the guy said, there's newer languages coming and different environments, and that all needs to be compatible as well. So that's that side. And just on the end user side, 95% of the users don't go cross-chain because it is so stressful and it takes time and it's too complicated. So to be able to use the whole of Web3, it needs to be one click to anywhere. And that's something that layer 0s could solve as well.
So I mean, so far we've identified different opportunities and also challenges, right, from different angles. So looking at this drive for innovation, which party should drive that? Who should take the lead, right? Are these the business practitioners, technical personnel? Should it be the consumer demands, or a combination of all these factors? What are your views on that?
I think in general, like we have several challenges actually. As Joe pointed out, we started with, we figured out what Web3 is, and we have all the solutions actually. So there are a lot of problems at the infrastructure layer as well. If you see how you can easily upgrade your forks, whenever there's a fork, how easily you can upgrade and then provide bring in a lot more relayers to incentivize them to have the protocol secure. And I think in order for all of this, so we have to first address a lot of infrastructural problems. But at the same time, I think to go mass adoption, or to, as you pointed out, there is the adoption problem as well as infrastructure problem. So so there is a regulatory problems as well as there is a standards problem. How two chains can be interoperable. There is no clear protocol, right? So there must be a coexistence of protocols like ISO standards, similar to ISO standards, to be easily have two different ecosystems. To users doesn't have to worry about how they will be able to deploy their the contract. Like he was saying that users should have just one-click experience, and to be able to use the ecosystem underneath it. It doesn't matter whether you're using AWS or Azure, or it doesn't matter for them. User at the end of the day, they're having the smooth user experience. I think I would see that in the future, the projects are working a lot more closer to bridge this gap with having the standardized protocol to be able to interact with different chains in the ecosystem, and solving actually the problem together actually, rather than being isolated. I think the ecosystem has to come together to evolve the protocol and then have a standards.
And speaking of standards here, right, who should drive that? Because we have been speaking about the lack of standards for a long time in our industry, right? And there have been parties that try to push for it, but so far we have not been able to succeed yet, right? So what changes do we need to make, right, to be able to create those standards and have them be adopted by the mainstream parties?
Yeah, I mean, I have a very long horizon view, and I think it's better to actually let things get sorted out properly and not have somebody just come down and say right, this is it, we figured it out, we're just going to leave it like this. And adding to what you said, I think it takes there's room for everybody to contribute and participate, whether you come from like technical, business, social, and or like you're concerned about privacy or data use in Web 2 and you want to just try something new. I think like we try to take a very like scientific methods-driven development approach. That we come up with ideas about how things should work and be designed from first principles. We come up with hypotheses about them. We try to build them with engineers, and then we try to use them, not just among ourselves, but in our business team, in our like marketing, in our communication with other people, and just try to see how users react. And then we try to verify, was our hypothesis correct? And you learn some things and you go back and try again. There's room for everybody in that process. And I don't think like anybody, it doesn't matter if you're from business or from tech or from research, nobody has enough information to just say like, okay, this should be it. We're just going to set a standard like this. And that's not even like that's not a well-principled approach to any kind of design, not just in computer systems, but airplanes and satellites and stuff. You come up with an idea and say, you know, I think this would be valuable, but let's try to make a prototype. You don't just come up with an idea and build a $300 million passenger airplane. You do prototypes, you do testing, you validate your hypotheses and the principles that you base them off of. You learn new things, you make a new prototype before you actually make it the thing that you're delivering to market.
Yeah,
just adding. I believe, sorry, standards will emerge, right? And naturally, there is a free competition. Protocols will emerge. Developers will try different things, and good things will establish themselves. And I think there is a big puzzle that all of us are assembling together. And in terms of who is going to drive innovation forward, coming back to our original question. You know, at the beginning of the internet, when TCP/IP was created as a protocol, you know, we have the whole world running on TCP/IP nowadays. We even take it for granted, don't remember that. But people who created the first things on TCP/IP, they didn't know anything about Airbnb or Uber, right? So the people who create these interesting applications of the future using blockchains, they will come. I think our role is to create the protocols and give them the tools for these things to happen, right? So as long as we are able to tackle these very hard bottlenecks in terms of scaling, in terms of tooling, it's going to be much easier for us to see that going forward.
Shaim, I would like to give you the opportunity to pitch in, and then afterwards I would like to actually give the crowd the opportunity to also ask a question from one of the panelists here. So please go ahead.
So I think look, the role of blockchain or DLTs is just one thing, which is that trust the message, not the messenger. And there are plenty of use cases out there that need where that can happen on DLT, which is now happening off-chain, right? And basically, scalability is solvable. The issue is, if you think about it in terms of, I need to choose one chain and that's the fastest and I need to be there, you get outdated, you get dated very quickly. So if you're able to connect to all the ones that are fast and use that capacity, and then if there's the 112th chain that is even faster, and you're able to go there without having to re-engineer, you know, scalability, there is plenty of capacity there. It's just that all the current capacity is, or the users are going to this very crowded place when there's all of this latent, unused block space. And this is something that Layer 0 can tap into, and there's plenty of businesses that can come in and use it. So I think that side is solved, and won't take more of your time, though.
Danny, just quickly, you can take a minute. I think to the point that you were talking about, I think...
Make it quick, though, because...
Yeah, so we already have the protocol standards defined by each of the protocols, right? We have PIPs for Bitcoin, and then, like, you know, same for any other projects. Like, you know, the only thing that is kind of required is that, like, you know, I'm just taking an example, like as in NATO, like how they come together to have standard framework. Like, we should have, as, like, you know, projects, like, you know, to have that kind of framework. As you were saying, that, like, you know, we should trust the message, not the messenger. So if we have the standard protocol for such messages to be trusted across layer 0, then I think that kind of establishes at a longer run. Yeah.
I would like to give the opportunity for the crowd to also ask a question. So who has a question here? I see this lady raised her hand first. So let me throw this cube. Please speak in the mic. Oh,
good throw.
Okay. So question, and maybe mostly for Joe, building on that excellent explanation you gave of the difference between shared security at layer 0 versus a bridge. Is there a way to have the best of both worlds and use a layer 0 for shared security, but go cross-chain and share that security between different protocols like a bridge would get you?
Yeah, so that's like one of the main things that we work on at Polkadot, is that we've already had this message format out for about a year called cross-consensus message format. I kind of talked over myself there. But yeah, that's like the main idea about Polkadot, is that the different layer 1s can all specialize. So like, I've worked on a couple that don't even have smart contracts on them. They just have assets. And then another one has like governance, or like allows groups of people to act as a collective. But they can send a message from the collective chain to the assets chain and say, hey, I want to move, the assets from my account into some other account. And then when you look at it like that, a bridge is basically like a transport mechanism. So you can even have, like, in a single L1, like 2 smart contracts on Ethereum that are interacting with each other. That is, in a sense, like a message. Like one contract calling another contract is a message. It just happens to be in the same execution environment, and it just gets executed synchronously. Which, if somebody doesn't know, that just means that like the sender can wait for a response before they proceed. Whereas asynchronous just means you like send a message and it has some instructions and you kind of move on after sending the message.
Shime, you wanted to pitch in as well?
Yeah. I was just going to finish so like if you think about messages in that context, a bridge is just a transport protocol that sends a message over it between 2 chains. So you can also have 2 blockchains in Polkadot that the bridge, or like the messaging system, doesn't care about the message. It just sends messages between the different layer 1s within the network.
Yeah,
please go ahead.
So the issue is there are all of these protocols in which you can send languages or send messages, sorry, but it's interoperability or interconnectivity on one side and scalability is separate. So the user, I've sent a message to say another chain, but I'm waiting 20 minutes or one whole day for the whole round to happen. So it's about combining both the scalability and the interoperability in a consistent user experience. That's when I think it really works.
Just to add on top of that.
We're out of time, unfortunately.
Oh, yeah.
So I really would like to thank all the panelists for their contribution. I really enjoyed this discussion, and I hope this was insightful for the crowd as well. So thank you a lot for listening in, and thank you also all for participating here with me today as well.
Yeah, thank you back.
Thank you.
Thank you so much, Danny, and also to all of the panelists. And as I said earlier, if you want to reach out to any of the panelists or Danny and continue the conversation, you're here today and tomorrow, all of you. Yeah, so please do reach out, and if you see me, I can, make the introduction, but, it's worthwhile mentioning, so thank you so much. And with that, we're going to take a break, but do know that at 6 o'clock, we start here again, and just to give you some nuggets, we're going to talk about, Google is going to talk about their adoption with Web3, we're going to talk about breaking the friction between fiat and crypto, and we're also going to talk about institutional adoption of digital assets here in the present and the future. So a lot of interesting things to listen to. But now that we're going to have an hour break, all of you here, please do go to the NF Gallery, Metaverse, go up to the startups, meet the different corporations that are here, and mingle among yourselves and use the Brella app. And also to our online viewers, thank you for, continue to watch here. Do be active in the chat as well among you, and make sure that you're back at 6 p.m. And also do use the Brella app, because you can also do digital meetings and reach outs through that. So see you all at 6 p.m. Thank you. a warm welcome back. I'm so happy to see that many of you are being pulled away from the metaverse and networking and everything to join us for the last hour here. It's going to be an interesting hour. And I hope it's been an interesting day so far, has it? I mean, there are a few, yeah, good, happy to hear that. And you know, in a world where there's constant noise, it actually takes silence for us to connect both to ourselves, to our environment, and to all the information that is flowing back and forth. So I wanted to invite us to a little, it's not an experiment, but maybe out of the comfort zone, no, but just out of the agenda at the moment, to just reconnect to ourselves. Because the most precious commodity that we have that exists in our own inner metaverse, that far exceeds any valuation of an NFT with a priceless utility and a universal smart contract on an esoteric inner blockchain, and is the most sustainable and regenerative governance there is. And it's also free, and we depend on it. Do you know what I'm talking about? Our breath. I tried to be a bit artistic there with taking in the Web3 lingo into it, but it's our breath. So what I thought I would do, because I do a lot of breath exercise, and I know a lot of leaders around the world are doing this as well, because it's through our breath, the consciousness of our breath, that we start to connect. And when you have a lot of impressions, insights, dialogue like today, I want to give us an opportunity to just 30, 40 seconds, get the sensation of what happens when we really close our eyes and connect to our breath. Can I do that with you? Yes. Hello? Can I do that with you? Yes. Thank you. And I think this is good to start even from a young age. Oh, isn't that good? I have 3 youngsters here. Would you like to join me? It makes it more fun. Oh, and who do we have here? Mathias, come on, come on. Join me, guys, to showcase, give them a round of applause. It wasn't in the agenda. This is just me, but we were going to have a real breath facilitator, but unfortunately, he got problems in the family, so that's why I'll be doing this with you. So really, this is very spontaneous, but what I want us all to do, and then maybe you can explain, and maybe sit down, because it's hard to. So just, if you just want to close your eyes, and please really do this. Close your eyes, just disconnect from the person next to you. And just start to connect to your breath. Even you in the front here, don't laugh. I know it can seem silly. But just give it a shot, because how many times do we actually just connect to ourselves? So if you just inhale, you exhale, inhale, exhale, and just start to feel the presence. I mean, the seat you're sitting on, the feet on the ground. Thoughts might come of what we talked on stage. Keep on breathing, just inhale, exhale, and like, you know, just release a bit. Even if it feels uncomfortable, just give it this moment. Connecting to the most advanced technological essence there is, our body. And just for a second, just feel the presence of this room. I mean, feel the presence. There's someone beside you. There may not be someone beside you. But in this presence, it's more easy and tangible to understand how interconnected we are. You know, we're all sitting in the same room. Just like technology is very interconnected, whether it's physical technology we utilize or digital. So one more breath in. And just release it out. Sort of feel the life energy in your body coming back. Start to feel the room. And just feel that moment of gratitude. We are all here making ripples in the universe, you know, contributing to change in whatever thing you're doing in your life. So this was a very meditative breath work. You can open up your eyes if you still have them closed. But it's just a taster. Because I know sometimes when we have these conferences, it's very much, you know, one dialogue and you're the audience and we're up on stage. There's so much information. And I think this is going to come even more because spirituality and technology are sort of getting a bit intertwined. So what an eminent, we could have a panel now. Should we talk about breath? Yeah, no, I'm kidding. Thank you so much for joining. Was this new for you? No? You've done it before? You started meditating a year ago. This is why I say the younger generation, you're much more tapped into this. Yes. This is how we're going to make the world a more connected place. So thank you so much for elaborating on that. And even though it was short and maybe you thought it was silly or not, sometimes we just need to try something new to see if we like it or we don't. So with that, it's time to get back to the agenda. A warm welcome back also to our viewers online to the last section of today. We'll be running until around 7 p.m. So now we are going to talk about, for this last block, talk about traditional players entering the Web3 space and how one of the tech powerhouses also is presenting on how they're entering into this Web3 space and what that implies. Many of you maybe met them here today. All of us know about them. I'm, of course, talking about Google. So more to talk about this, give a warm welcome to Daniel Rod, who is Head of Financial Services and Web3 EMEA for Google Cloud.
Hi, everyone. And thanks very much for your time, also to the people online. Hope everyone is having a good event. I really appreciate you coming back from your drinks. I know that must have been quite a challenge, but I truly appreciate it. It did hurt a little bit when she said the traditional companies, because typically when we engage with other companies, we're not really being seen as the traditional company. So I guess it's a reality check of where we are in Web3. My name is Daniel, and I lead our Web3 efforts in EMEA for Google Cloud. And today, I just wanted to share a bit with you around why we are in this space. And it is a very exciting space. And a little known fact that might not be known to everyone here is that Alphabet actually is the biggest Web3 investor of all the publicly traded companies. And through our sister companies and VCs, we are trying to create an on-ramp for the industry and bring Web3 solutions to our users. And in cloud, we are especially excited about this. And you might have read some of the partnerships that we have already done with the likes of Hedera, Polkadot around the corner, Block One, and a few exciting ones coming soon. And what I think is on the minds of many people, not just here today, but throughout the industry, is the question of what is going to happen in Web3. It has been a crazy year, let's face it. And wouldn't it be amazing if we could just ask the Google search engine to come up with that answer? The reality is, we don't have the answer to that question. We come to this space very humble. We're here to learn, we're here to listen, and we're here to partner with the ecosystem. And what we can bring to the partner ecosystem is quite an interesting experience. Because if you consider that we have built global applications with billions of users, where we provide value to people's everyday lives. So what can we take from that experience and bring that to the industry? And part of that was also to build an infrastructure that could support these applications. And as it was suggested, Web 2 actually has done quite a lot of interesting things that we can probably learn from and bring to Web 3. Consider this. We had to solve for some of the biggest engineering challenges, and one of which was protecting our infrastructure against shark attacks. And if we want to take what we have learned from the Web 2 world to Web 3, what would that look like? So what we have done over the years is we have built a global network of infrastructure with 19 ocean cables connecting the continents, over 40 data centers and more coming online. And why is this important? It is important because in all of my conversations, people talk about the fact that we need to bring on board the next billion users. And bringing on board 1 billion users or billions of users requires a true global infrastructure. And I think today in Web3, this is not something that is being discussed enough. And if you think about some of the challenges that we'll have to face in safely, securely bringing on board these people, these users, thinking about running nodes, a global network of nodes, whether it's RPC, archive, or validator nodes, I don't think many people are really excited about infrastructure necessarily. Who in this room is very excited about infrastructure? Exactly. I see a few hands. I don't think in the end many people are. And why would you want to spend your scarce resources on maintaining your infrastructure and building a global infrastructure where you need to be concerned about adopting new users, a seamless experience, your UX? You want to think about abstracting away that layer that provides the foundation for your global application. And if you then think about what it is we're trying to achieve as an industry, I came across a quote that I thought was quite interesting to share with you. And it's this. And if you read this quote, you probably think that this was from a previous panel today or anyone really from Web3. And what is actually fascinating that is not at all the case. I think it's good to remind ourselves that the problem of decentralization, of having a network that is censorship resistant, decentralized, is a problem that we started looking at decades ago. That problem didn't start with Satoshi's white paper. And if you then consider that we as an industry are spending a lot of time debating who is Web 2 and who is Web 3, and one consensus mechanism to another, an exciting day today for those interested in Ethereum, obviously. I think we need to go back as an industry and think about what the web brought. It brought democratization of information. Web 2 gave us all a voice, and Web 3 with the promise of democratizing ownership. And what we want to do as an organization is we want to work with you. We want to build with you. We want to partner with you. And there are many opportunities that we can bring to the table. You can think about co-sell, co-marketing. We want to invest. We want to be part of this super exciting innovation that we're all seeing today. And it's a journey for us as a company as well. And for us, it's a continuation of the journey that started with the promise of the internet. And we are all really excited to see what will happen for all of us. And please come and talk to us. We have a booth. Very happy to have a beer. So hopefully we'll talk soon. Thank you very much for your time.
Thank you, Daniel. I like that. Compete with imagination rather than rank. Okay, so another big traditional player who is entering the Web3 space or in the Web3 space is Visa. So the theme for this keynote is an interesting one. It's breaking the friction between crypto and fiat money. So Klaus Stenkamp, who is our next speaker, leads the sales expansion of Visa Direct, its services in Central Europe, and focuses on high growth opportunities in the financial and fintech industry. Prior to Visa, he worked on digital business models for content industries and e-commerce before moving into the fintech space and leading the European expansion of payment fintech. So now we're going to sort of learn more, use our imagination, and see the friction that can happen when the crypto industry wants to include fiat currency. So give it up for Klaus Steinkamp.
Thank you, good afternoon. Thanks for the warm welcome and the introduction. My name is Klaus Steinkamp. I'm part of a team of Visa that leads the sales expansion of the product Visa Direct. In the next minutes, I'll talk about a problem we're observing for an industry like yourself, the crypto, and other blockchain-based applications. And I also will be presenting a solution to this problem we're delivering globally. During the presentation, I will use the term a lot, crypto space, crypto vertical, but I strongly believe all of what I'll be presenting is applicable to companies with metaverse or with NFT focus as well. Before I jump into the problem, a quick one on Visa. This is really impressing what we've achieved in the last 60 years of our company, but I want to highlight two things, actually two pairs of data. When you look on the top of the slide, today we have 3.9 million card credentials in the market, and we strongly believe this is going to grow in the next 5 years to 30 billion. And the next pair of data is the 80 million plus merchant locations we're having today, which we expect to grow to 460 million, which is really quite impressive. And we, as a team, are working hard to deliver value based on this global network. So what is actually the problem we're seeing? We see that a lot of crypto-based applications, blockchain-based applications, do integrate and do engage with fiat currency, and we see friction in the on-ramp of the fiat currency and the off-ramp of the fiat currency. Let me show you a UX to make this explicit. So what we see as a consumer, let's say I search through the internet, I find the application, the crypto application I like, I sign up, I may do some further identification, and then I'm ready to buy. So next step would be to load fiat funds into this application. So the ideal scenario would be that these funds are really in real time available so I can buy at the price I see and want. And we see that this is not always the case because bank transfers still take days and you may not get the price. So this is what we're seeing today. Let's assume you spend advertising dollars on acquiring such a customer. This may be lost because this customer is dropping out. And then the second, what we see, that was the problem we see on the on-ramp side. On the off-ramp side, we see that, let's say we stay in the same consumer example. The consumer did trade on this account. He buys, he sells, and let's say he has 10,000 euros in his account and wants to withdraw 2,000 euros. So ideal would be you have the 2,000 euros, you disburse, you click, you have an easy UX, and then the funds arrived on the target account in real time and be available for spending. Also, this is not always the case. We see friction on international bank transfers, and they are costly. From personal experience, I actually closed a US-based account 2 years ago with $60 left, and I wanted to disperse the $60 to a German account. So I chose the IBAN of a German fintech, and the money never arrived. So the costs were estimated between $25 and $40 of those $60. So second attempt, I entered an IBAN of a traditional German account, and then the money arrived within a working week, and $25 was the fee. So it worked, but it wasn't ideal. So that's the two things we see as a problem, on-ramp, off-ramp, and we believe we can deliver a solution based on our platform, Visa Direct. Basically, when you look at the slide, and I'll go into a UX, not dive into product details, the AFT, basically the account funding solution, account and funding transaction is a solution for the on-ramp process, and the OCT, the original credit transaction, is a solution for the disbursement. So on the next slide, you will see a UX. It looks a little generic, but that's what we're actually seeing in the market. Obviously nicer when fintechs do this. But given that I have only 2 minutes left, I want you to look at the benefits. So let's assume the ideal scenario I described is reality through this solution. So consumers really have the funds available instantly and can start interacting on the side. And then you guys, as crypto merchants, as crypto player, you can actually really market a seamless experience. So this is really a big advantage we're seeing. And then the off-ramp process, also a nice UX. Basically, with a few clicks, you make a decision to disburse a few €100 or dollars. You type in your targeted Visa card as identifier, and then you click and you disperse the funds, and they arrive mostly instantly on the targeted Visa card. Again, the benefits, it's really about the arrival, it's about the UX, it's the real time when the money is available. And then for you guys as crypto merchants, you can really differentiate yourself from traditional solutions and traditional brokers. To sum up, we believe we do have a solution for you guys on-ramp, off-ramp, based on our global, secure, and safe network. And we really would love to start engaging with you guys, to start discussing and really finding out where we can support each other and can work together. So really do reach out either here on the stage or let's say outside for a drink or then on LinkedIn. So really looking forward to you. Thank you.
Thank you, Klaus.
Thank you.
So now we're going to meet the oldest player in Switzerland when it comes to being a veteran and pioneering the crypto financial services since 2013. And I'm talking of Bitcoin Suisse. And here to talk more about that is Dr. Dirk Klee, who is an experienced, innovative leader, also very passionate about building and leading customer-focused businesses, and acts as an architect of the transformational processes. So give it up for Dr. Dirk Klee.
Voila. Welcome, and again, my name is Dirk. I took over the helm of Bitcoin Suisse about 6 months ago. For everyone in Zug, Bitcoin Suisse is a very known entity, but for anyone else, it is a gateway for professional, private, and also institutional clients to access crypto. We trade, we store, we provide additional services like staking, we do private placements of crypto and all sorts of ancillary services. So pretty much a full service provider, but a crypto native house. So where do I come into play? As I said, I'm joining from traditional finance. And I think, and I want to be, the guy who leads Bitcoin Suisse to the next level in its evolution. We started early on with providing easy access to private clients. We even set up ATM machines for Bitcoin in the early days when access was very cumbersome. And then we evolved with the needs of our clients, but also, with the asset class evolving and the whole crypto space becoming really, really broad and deep. And we gained a lot of experience and have a lot of, fighter spirit in us for, crypto. And we truly believe it makes a societal difference in the long run. However, started, out with private clients as we evolved into the more professional space and the needs become more specialized, we also had to change. And that change will continue and will lead us to the next step. And, excuse the heading, I think my head of marketing got a little bit away with himself, but, where the experience that I bring and the journey of Bitcoin Suisse coincides is that meet of traditional finance with the crypto native world. So my experience, which I find relevant for that next stage, is at PIMCO, I learned excellence in a specialized house. I think that's very relevant in the crypto space. I don't believe you can do all asset class and also do crypto. Crypto is a very fast-moving animal, and you need to have very deep expertise, and a lot of things can go wrong. So I think, staying the course of being a specialized crypto house is our destiny, and my experience has proven that over and over again, If I look at asset management, the specialized players like PIMCO or BlackRock or Fidelity have taken over the world. It was not, the large financial houses who also had asset management. The second thing is, my journey at BlackRock, where I was, early or an innovator on iShares. So I launched the European iShares business back in the days. ETFs is a product that was disruptive at the time. Nobody wanted to sell it because we were, stripped of a distribution fee, and we had basically to run against the wind all the time. And this kind of fighter spirit is still with me, and I feel it very much in crypto space. Crypto is still early. A lot of things are not understood. A lot of things are truly crap. So you have to make sure you provide the right services, the right tokens, and guide your clients on their journey. But it will eventually succeed. And that was my story back then. And then at UBS, where I was the global CEO on the wealth management business, yes, I worked very hard on technology, and I saw the beauty of scale. And I think that's also what's next in crypto space, right? That these true scale players will evolve. We want to play in that space, but again, right, being a specialized house. Another experience was a failure. I was very early in, pushing robo-advice and built one, and then my successor thought that's not the right thing for the bank and killed it right after I left. So, it was a learning here as well. And then finally, at Barclays, where I was running the wealth management division, I learned from all my mistakes. I pulled them together, but this time I didn't believe we could build technology ourselves. And I partnered with leading fintechs, and I basically developed a platform ecosystem for wealth management. And again, I feel that's the journey very much in crypto space, where a lot of companies like ours have built proprietary technology in-house. But now as we see more and more specialization and people getting really sharp of their value proposition, and you will see also then leading players come out which you can't compete on individual pieces, you should partner. And you should provide an open API framework and just become the aggregator of the best services and provide clearly a technology layer on top of that. So that is the journey for Bitcoin Suisse. We're moving clearly towards the institutional space. The first couple of years was helping private clients to come along in the crypto world. And now the institutional world is coming down to us, and we see it very much. Just a couple of highlights that we can witness in the last, I would say, 2 years in particular, is that the big institutions not only investing in crypto and identifying it as a legitimate asset class, right? Hopefully over time also providing true diversification, but they're going into this field, they're building the rails, they want to connect to the crypto world. So we are coming from below, we are that crypto native partner, and we love to partner with them wherever it makes sense. And I think, the benefit for blockchain and crypto adoption comes exactly from that combination. I don't think us alone can get there. And I also believe that the traditional world needs to learn from the benefits of blockchain and crypto. Both are very much connected. Together, right, it will be truly revolutionary. And I believe the next strong phase of growth after the crypto winter is just ahead of us. Thank you.
Thank you. What a great conclusion there. So to conclude, we're now going to have a panel before we end for today. And it's a panel consisting of crypto players and also services for institutions to talk around the institutional adoption for digital assets, present and future. And to moderate this panel, we have the head of institutional sales at Crypto Finance, which is a company that helps traditional finance institutions set up tailor-made solutions to offer their clients exposure to crypto. So I say welcome up on stage to Stephanie Hurry, who is, in addition to being head of institutional sales, also a passionate marathon runner and an aspiring yogi. So give it up for Stephanie Hurry.
Super. Hello, everyone. In the context of the broader bear market and with the hawkish Fed, ECB, war in Ukraine, death of the Queen, we might find ourselves becoming quite negative about the institutional adoption of digital assets. However, we've also had some really exciting announcements recently from BlackRock and also from Brevan Howard launching their $1 billion crypto hedge fund. So where are we in terms of institutional adoption of digital assets? The panel today of subject matter experts are here to help us delve into this topic. With me today, I have Martin Berger, who's the Chief Client Officer and Group Executive Board member of Sygnum Bank, who has a background servicing banks from KPMG and Deloitte before moving into the crypto space. I have Gertje Phillips, the CEO of Crypto Index Series, who has a PhD in computer science and is an entrepreneur with an illustrious career across finance and industry, and a subject matter expert in taxonomy, tokenomics, and crypto assets. I have Leonard Lancia, who's the CEO of Portofino Technologies, who has extensive experience in quantitative trading before joining Citadel as the European Systematic Options market-making head. Then last but not least, Dirk Klee, who you've heard from prior to this panel, who's the CEO of Bitcoin Suisse, an architect of transformational processes in the C-suite, and has had extensive roles within the C-suite of asset management and wealth management in BlackRock, UBS, Barclays, and the like. Thanks very much, everyone, for joining today. Martin, Sygnum is a FINMA-regulated bank that services institutional clients as well as professional clients. Could you tell me a bit about the often cited barriers to crypto adoption and where we are, so education and regulation? And in addition, when you're speaking to clients, how are they feeling about the crypto market in the current conditions?
Thank you very much. Yes, so I think regulation, I think this is a topic which has been heatedly discussed about the last 5 years, and I think this year quite impressively showed like how important regulation is. Not only AML regulation, which I think is now already, or has arrived in the crypto space since a couple of years, but also what we basically witnessed with, for example, Celsius is more of a bank run. Like it's a risk which is known in the banking space, and it shows how important it is that you make sure that you have certain liquidity rules, capital adequacy rules in place in order to protect customers. I think what we also learned is that, well, it is important that we have innovation in crypto, and clearly regulation probably prevents certain innovation, but it's also important that we protect the customer. So regulation ultimately is not here to prevent innovation, but regulation is here to protect customers. And I think hence, this is something which plays quite in our favor, because we're going on this fully regulated route. Now, I think education is a very, very important part, and that's what I'm always saying, like my job is 90% education, because I think still in the institutional space, it's often like these negative connotations. It's used for anti-money laundering. I think more recently it's used to circumvent sanctions. And I think you need to do a lot of education to show, okay, what is the real use case of crypto? And I think the difficulty is also that crypto, or many of the crypto applications that we have, or let's say the asset class that the institutions look at, they are basically infrastructure. Now, infrastructure is also in traditional finance is difficult to understand. You know, if you build a highway, for example, it's difficult to understand. Okay, what is the NPV? What kind of use period you have in order to recover the invested money and the likes? And I think it's the same with Ethereum. So many people, for example, say, okay, but how does it generate cash flow? And I think that's something which makes it difficult to explain to institutional investors. Okay, what is actually the intrinsic value of Ethereum, right? But if we look at the analogy, for example, to the highway, it's a base layer infrastructure, and you pay actually a fee to use this infrastructure. So it's similar to like you build a highway and you ask for a toll for people to drive on it. And this is a bit, for example, how I explain the value of Ethereum. And this, I think institutional clients, they also understand well, right? It's a cash flow. You pay a fee to use an infrastructure. Now, with regards to how clients behave, I think interestingly enough, like we serve only qualified investors or professional investors, institutional investors. And interestingly enough, I would say high net worth individuals, they behave quite similar to retail. So I think there is also this fear of missing out in a bull market, but there is also a bit fear in a bear market. So I think we see that these individuals, they behave quite similar like retail. But we see also there is some smart or very smart money, I think typically then professionally managed, for example, through a CIO. And I think these people, they simply look at KPIs like volatility, drawdown and the likes, and I think they can cope quite well with what we now witnessed this year. Actually, if you look at the volatility of crypto and the drawdown that we witnessed, crypto did quite well also compared to other asset classes, and hence I think these professional investors, they are well able to cope with this kind of market environment that we have.
Oh, thank you. And Dirk, has that been your experience as well? That I know Bitcoin Suisse has really shifted from being retail focused into more the wealth management space. Do you find that client types are similar and that investor protections are important?
Yeah, I think it's a true shift, and playing back to what Martin said on education, you more you get into the institutional space, the more you have to use a language that they can understand, right? So I mean, they look at it in a overall portfolio context. Yes, the intrinsic value comes a lot. They are skeptical about the correlation between crypto and other asset classes. And yes, they are requiring an institutional grade standard of their services, because they are largely fiduciary managers, and they need to have a trusted partner. So I think all of that we are providing, and retail clients driven, I believe, by totally distinctive motives.
Indeed. And Goethe, from a crypto index series perspective, you provide institutional grade access to trading and portfolio management APIs, and you support institutions in integrating digital assets into their service offering. How do you find the digital asset space compares to traditional finance when it comes to the likes of data and analytics? And in addition, what challenges and improvements will we need to really drive digital asset adoption by institutions?
Thank you, Stephanie, for the introduction. And I'd like to thank the audience as well for being with us at this time of the day as well. Right, so I'd like to address the question in three parts, right? Similarities, differences, and finally the improvements that we can introduce. In terms of similarities, obviously, pricing data is one. So it's very similar to traditional markets where you've got order book data, pricing data. So this is very similar. And then the institutions would like to see crypto assets as something similar in traditional asset markets. In the beginning, they thought, can we treat this as a currency, as a fiat currency or a forex? But it's more and more now going towards the equity markets, actually, the way they are looking at crypto assets. Another type of data that's very similar is, the indices, the benchmarks that are established in traditional markets. That's also the kind of data they're looking to have in assessing crypto asset markets. So these are some of the similarities, but the challenges are there, by the way, in terms of collecting all this data, because each crypto exchange has their own different APIs. They don't necessarily follow a standard. The way that you need to be collecting data for each exchange is different. And hence, not every institution would like to be a data collector. And that's where service providers like us come in. In terms of differences, the way I'd like to explain this is through fundamental analysis. When you're doing fundamental analysis in traditional markets, you need lots of data about that particular company. Now, in crypto assets, these companies are not established companies. They haven't been around for tens of years. And therefore, you need data about their business model. You need data about regulatory aspects. You need data about their tokenomics. So all these are different. When you're, let's say, assessing a crypto asset, you want to know whether it's a stable token, it's a DeFi token, is it a payment security utility token? So you want to look at it from regulatory perspective. You also want to look at it from tokenomics. Are they mineable assets? Can they burn? Or are they twin assets, like in Luna case, for example, where one goes down and unfortunately drags down the other? So all these data comes by studying those specific characteristics of crypto assets, which unfortunately institutions may not necessarily have the knowledge and expertise thus far because it's all new. So again, that's, I think, service providers like us, that's all what we're doing. We constantly follow the market and we constantly try to get whatever new data is available and we try to turn it into analyzable and searchable format. And in terms of improvements, there is an initiative in Switzerland, actually. I'm sure perhaps some of the audience might know Open Wealth Initiative, orchestrated by Simpulse AG and partnered by so many among us. We're also one of the members. So the idea there is try to make the wealth management open to institutions. And where we come in is it's going to be named possibly as Open Crypto Wealth Initiative. We try to come up with standards that's going to make easy for institutions to adopt what service providers are offering. Just to give you an example, Fix protocol is very well known and established protocol in traditional markets. Whereas, most of the service providers or entrepreneurs, we don't necessarily want to be dealing with fixed protocol. We want to be doing it through REST API, for instance. So if there was a standard where most of the service providers could utilize, and then we would be talking the same language with the institutions, or at least delivering their expectations. So yes, a short answer, hopefully, to the question. Thank you very much.
And thank you. And I think absolutely a standardization across technology standards and as well as industry bodies, I think will really help to support crypto assets. Leonard, on your side with Portofino Technologies, you're a startup that has proprietary technology supporting access to liquidity or crypto asset liquidity on and off exchange. What role do you see market makers playing within the crypto space in terms of driving digital asset adoption?
I think institutions typically, when they enter a market, look for three things. Mm-hmm. They look for ideas, they look for liquidity, and they look for regulatory certainties. So ideas, well, that's basically you, right? All of the projects, all of the innovation in the space, a lot of amazing people that have been pushing forward the ecosystem over the last few years. Regulatory uncertainties is being addressed. I think it's accelerated lately. It's going to land. I don't think we should be concerned. So you're left with liquidity. And at Portofino Technologies, we're all about liquidity. We're providing liquidity on centralized exchanges, decentralized exchanges, and over-the-counter to institutions. And we're building this technology that needs to scale to fulfill these requirements. So I think when you think about liquidity, when you think about institutions, what do they expect from best-in-class market makers? What do they mean when they talk about liquidity? Generally, it comes down to three things: price, size, symbol list. Mm-hmm. Price, obviously, an institution needs access to the best price in the market. They require best executions. So how do we solve this? With tech. We build strong technology, scalable technology that scales and that is able to connect to centralized exchanges, decentralized exchanges, and provide the best price, or even improve on the best price. Size, obviously, your typical institution is here to deploy assets, and they need access to not just like the ability to trade $1,000, right? They want to deploy large quantities of assets. And they don't just need you to be able to do like that one trade. They need you to provide the best price at size consistently all day long, whether the token is liquid or illiquid,
whether the market is volatile or not. And how do we solve this? Well, again, using technology. We don't leave the judgment call to a human being. We automate using algorithms, using a software, and we always come back with the best price or an improvement on the best price at size. That's very important. Again, you think about your hedge fund. They want to execute this idea. They need to know how they're going to enter the position. They need to know how they're going to mark their books. They need to know how they're going to risk manage and exit the position. They need somebody reliable. And finally, symbol list. Here as well, you solve this with technology. You need a scalable infrastructure that's scaled to the thousands and thousands and thousands of tokens and cryptocurrencies that exist. We have over 15,000 instruments and pairs in our database. And institutions need access to all of this. They need you to extract the complexity of whether a token is listed on centralized exchange and which one, or a decentralized exchange or not listed at all. There as well, we partner with Web3 projects that are not listed yet. We help them to distribute to institutions before ICO, and then we help them list. And maybe my closing remark would be that all of this, what does this look like when it's executed well? Like, what does it look like at scale? Something that we care a lot about when we build this technology is the ability to sustain a business model where the fees will go to zero. In traditional markets, we built market-making systems that could, in most of the cases, pay back a chunk of the spread to institutions. And we will do that here as well. That's extremely important because institutions don't want to pay 1%, 2% of fees to execute, whether a token is liquid or not. And when more market makers are coming in and where they are doing their job, more competition will drive the fee down. And we welcome this because lower fees means more volume, means more institutional adoption. That's what we're here for.
Oh, absolutely. And I think a point that you touched on and Goethe also mentioned is that digital assets are not all one and the same. Goethe, you mentioned that more and more the thinking is that these assets are more aligned to equities from a data perspective, but you have to look at each individual token. Do you, Leonard, or any of the other panelists have a view on which digital assets will be adopted first or are being adopted already by institutions?
Well, I think right now we see that, let's say, I mean, most institutional money, and we didn't discuss about like how far advanced is the adoption already of institutions. And I think we need to admit that even though we talk about the adoption since many years, the adoption is still at the very early stage. Like the pension funds don't have a large allocation. I think also the insurance companies, they don't have an allocation. Sovereign wealth funds, they don't have an allocation. So the adoption is here. Family offices are entering, pension funds are looking at it or entering. But I think what we see is now, for example, the entry product, for example, for pension funds is venture capital. For this, there is a regulation in place. They can allocate the capital. And I think many of the institutional money, or a lot of the institutional money is actually flowing into venture capital. And of course, then within venture capital, actually, you have the whole token universe, utility token, asset tokens. So you basically have this innovation that you also refer to. Basically, you buy innovation. And I think the first asset that they probably buy is innovation. I think there the allocation is already there. And then the next one, my hypothesis would be it's crypto. It's Bitcoin, Ethereum. Probably, typically the money always enters the most liquid position, and the liquidity is, of course, in the blue chip protocols. And hence, I think what we observe from our institutional clients is typically they enter probably family office, they probably entered in 2019, 20, they entered Bitcoin, and then they moved to Ethereum. We then also saw that when you enter a space, you follow the space more closely, and you actually learn there's much more beyond Bitcoin, Ethereum, and now they probably went from Ethereum to further layer ones or layer two, or even application layers on top of the layer ones. So I think that's the typical journey, and I would say all the institutional money that comes in will probably go through this journey.
No, absolutely. And I think that crypto assets are the best use case that we have for blockchain technology as it stands. So I think the idea of having securitized or tokenized financial instruments might be very exciting, but we still have to develop market infrastructure to support the trading. So it's a very insightful. Thank you. Dirk, Bitcoin Suisse, you really have a strong base, or had a strong base within the retail segment, although the business has really shifted toward wealth management, and you have a strong institutional client offering, as well as offering prime brokerage for family offices and external asset managers. How do you see the dynamic between retail and institutional money within the space? Do you see crypto obviously had its genesis within retail, different from traditional markets? How do you see that evolving, and do you think institutional money will crowd out retail?
I think, you know, the interests eventually will merge. There is a beauty of coming from both sides at this, and I agree, right? It's right now it's all about crypto, which is why we're on this space, right? Still, and tokenization is a long way to go. You know, what we learned from retail clients is really ease of use, access, trust is a very important feature. And they are largely motivated either by speculation or, you know, just believing that the traditional money system will eventually fail, and that's a hedge, right? So we have lots of true crypto people, you know, trading with us, and that's also a bit our reputation, right? Being that place, and you know, being a leader in innovation. But we learned from that, and we built a quite strong foundation on which, right, you can build an institutional business. When it comes to institutions, it shifts towards beyond education that we talked about, is providing rails for them. Some need technology support. We also provide, for example, compliance support, right? We have lots of compliance experts, purely crypto, and, you know, basically give a handover. It's part of education, but you know, it's building institutional rails so they can move forward with their adoption. After the private clients, and you heard that, family offices were next, and usually they are quite risk takers, right? They have huge allocations in private equity, usually hedge funds, and adding the asset class of crypto is almost natural with them. For pension fund, for the large asset holders, it's a longer way, and you know, we're still working with them. But you have to, it's not one size fits all, right? When you come to institutions, you have to really target them or approach them with specific services, and also catering to their specific needs, and also speaking their language, right? So to a pension fund, you speak different than to an EAM or, you know, endowment or insurance company or whatever you have. But I think it's coming together. And while we have not seen the large institutional asset flow yet, my impression is that they are using this downtime to double down on investments in the infrastructure. They're all working on it. They're all reaching out. They're all saying, listen, we all need that and more. And so they are, you know, building infrastructure, sometimes also hiring their own teams. And in the end, this will just, you know, further increase the crypto adoption. So I think, you know, it's a good trend. We don't mind the crypto winter, to be honest, because it gives us a breathing space to fix a couple of issues, because we've gone very fast, and then, you know, when the market picks up, we will be ready.
Oh, absolutely. And I think one of the comparisons has been made to the current market cycle relative to, say, the post-IPO boom 2017, 2018, is that there is a lot of dry powder in the space. You mentioned the venture capital, Martin, and in addition that you have strong institutions in the space that are starting to develop the rails, Dirk, so thank you for that input. Gocha, from a data analytics perspective, do you see this real differences between specific groups of institutional clients, Or do you have a comment?
Yes, absolutely. I mean, depending on the customer we're talking to, whether it's a hedge fund or an asset manager or a wealth manager, their requirements are different. But I'd also like to add to Dirk's comment about these institutions need to be ready. And they need to be ready not only to keep their current customers or affluent mass, but also they need to get ready for mass market to ask for more. Because we keep saying, oh, we're democratizing the payments, we're democratizing the investment vehicles. And through doing that, what we don't realize just yet is right now, the person on the street is going to want from a bank to be able to buy Bitcoin or to be able to buy a share of a skyscraper in the States. So, suddenly there will be many more of these. These are all in the making in the background. And once we tokenize the shares, once we tokenize real estate, once we tokenize, the art, and once all these projects are scaled up, then suddenly you're looking at, the mass market wanting to buy these shares. And therefore, banks or other financial institutions need to be positioning themselves so that they're ready to offer these. Otherwise, they're going to be losing business to other startups, which I'm sure they wouldn't want. And hence, yes, we're here as service providers, but perhaps next year we're going to be seeing institutions here asking from us that these are the things we'd like to get, we'd like from you guys. So please make sure they're ready to support our journey for product delivery.
Oh, absolutely, and I think they're very long cycles in the engagement with institutional clients. So as we try to really get the input from the banks going into that space, we have to be patient, but on their journeys as well. Martin, I'm sure you have some comments on that from your side in terms of Signum's role.
Yes, probably picking up a few thoughts also from Dirk, right? I think, yes, institutions are preparing, and I think we, for example, now see that many banks are preparing, right? When we looked at, banks are also, of course, institutional investors, and I think when we talked to banks 3 years ago, these were really the banks who entered the space back then were really a bit the Winkelrieds, right? So they were very brave and they really want to be innovative. And I think now we see that actually they opened up quite a bit. I think now almost every bank has these digital assets on the radar. And this also means then, again, when the demand comes back, there are actually more on-ramps than also for people to enter this space. So I think that's, for example, also something that I'm very much looking forward to, because I think in 2017 it was quite difficult to enter the space. In 2021 there were then actually quite some roads to access the space, but now it will be even more convenient than in the next cycle. And another thing is, I think that's what you mentioned, the sales cycle, and that's also, I think, the question retail and then institutional. I think if you build a business purely on institutions, you just realize that the sales cycle is actually such a long sales cycle that it just, after 3 years, probably your investors, they run out of patience, because you say, look, I have a super long lead list, and they say, we now assess it very properly. We move now from passive observation to active observation, but of course you want to see revenues, right? So I think the shortest sales cycle you have clearly with private individuals. Basically, you have a session with them, you educate them, they take decision, we want to do it, yes or no, but there is no governance in place, there are no political interests and the likes. So I think you need both to build the business, and I think also the more retailish investors, they force you to have scalable processes, because you can actually serve probably 10 institutional clients without a super scalable infrastructure, but the more retailish clients, they force you to build a scalable infrastructure, and this is very important. This keeps you fit and proper. So I think you need them both, and I think also, for example, in terms of education, you also learn a lot from the discussions with all the individual client of what kind of questions they have, because ultimately the decision takers or institutional clients, they have the same questions. You need to answer them differently because you are in more institutional context, but actually what doesn't let them sleep at night is exactly the same questions that bothers everyone, right? And hence I think it's very important to really have this well-diversified client base, like Bitcoin Suisse, like we have. I think that's the recipe for success.
Oh, thank you. And I think if I were to draw a conclusion from this, it does sound like the retail and institutional client base within digital assets have a lot of synergies between them. in terms of retail leading with the demand. But there's a lot of work that we need to do as providers within the space to help to support institutions in their long sales cycles, knowing that we still have some work to do in terms of education, but that we also have strong providers in terms of both market makers and data analytics providers that are actually leading in some ways traditional finance. So thank you very much to the panel. It was really insightful to have this discussion with you, and enjoy the rest of the afternoon, everyone.
Thank you.
Thank you so much to Stephanie and the panel, and thank you in the audience for your, patience, your interest, for showing up. I mean, I started this conference with a quote that said, if in a world deluded by irrelevant information, clarity is key. And that meaning, I hope that this first day of the CV Summit has given you clarity, some insights, some key takeaways, experiential experiences in the NFT and metaverse, and of course, all the conversations on stage and all the conversations you've had when you've been networking and mingling, and also our online viewers, of course. Tomorrow is a new day, but before we conclude, I would like to welcome up on stage again the CEO and founder of CVVC. Mathias, would you like to join me? Just help me give a bit of a summary or any keynote insight that you got, or what's your take of this year's edition of your CV Summit? You're not mic'd. Could someone help us with a microphone? Perfect. Or just a quick microphone. There.
Thank you.
Yeah.
Sorry,
No.
you have to ask again.
Yes, I'll ask again. No, I'm thinking, any key insights or takeaways or impressions of today? I mean, of course, you've been at every CV Summit, so how has this one come across?
I like clarity, right? So you started the day with clarity, and I think I refer to it as the space is maturing. From every edition that I think we started in 2016 or 17.
Yeah.
The people that attend, the partners that are with us, the projects that are presented here, they evolve, right? And I haven't seen all the panels and discussions that we've had here, but I've seen a few and I can see that evolvement, right? And this gives me, great confidence that this is the right way. The industry is maturing. We have listened to this very last panel, which was very insightful, if you ask me. Adoption is here, and still we are only here when it comes to what's next. So I'm looking forward to the years coming, actually.
Yeah, and it was also mentioned quite a few times, that education is key. I mean, that's for every stakeholder in this sector, let's put it that way. So one is having conversations that matter, that also hopefully can ignite change or regulation or legislation or new mergers or whatever it might be. So that's also what the vehicle of CV Summit is about.
Yes, of course. You need to talk about that. It's not a simple space that we're in, right? So for me, I know that my mom doesn't know what I'm doing, right? But we do a lot of education. We talk to a lot of governments all over the world. It's the same everywhere. You have the less you know about technology and what you can do with it, the more fear there is, right? And for jurisdictions that try to adopt, I think if you are guided by fear, you shut down innovation. And so that's why you also need to talk to the regulators, to the governments.
And I think that's the exciting part of being in this industry or sector or whatever we might call it with these technologies, is that we're paving new grounds. So no one really has the answer. And that's why it also is, an integrated collective achievement where we're sort of learning along the way. But of course, we have to accelerate speed or legislate, whatever it might be. But sort of to feel that we're all contributing to something that is, on a higher consciousness level, let's put it that way, because we're creating something new.
I completely agree. Why do you go to conferences? Why do I go to conferences? Of course, you can learn a lot, right? But I want to be inspired, So, I want to feel why people are in this space. And I always, get inspiration from these events by talking to people, And I just before, I was talking to mathematician turned engineer turned entrepreneur that then, based on his experience with breathing actually and meditation, came up with that application where you could create NFT'd breathing data that can be sold to the health industry. I think that's fascinating.
I like that.
Things like that
Because
inspire
I've been
me.
thinking about NFM, non-fungible memories. We can mentally
There you
change.
go.
Anyways, so I thought also, or I thought, I got knowledge that we have a little surprise. We have a lot of people waiting there who've been part of the team, who we just want to bring on board and maybe do that, from the Oscars when you take a selfie with the audience in the background.
Sure.
So let's do that. Let's bring them up. Let's give them a round of applause. All of the people who've been part of making this happen. Here we have them. Here we have them. Woohoo! 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 I'm not good at names, but let's just look at these beautiful faces who have put so much time and energy, who are putting time and energy into this. So I don't know who's, I was about to say having the Kodak moment, but that was a Freudian slip, but who has actual photo? You do, and you're standing in the audience. Does that mean that I should take the camera? Oh my God, oh my God. Wait, do I just press go? That's all?
Want to go for a check?
Yeah, so it's just this one, right?
Yeah, this one.
Yeah, I'll go for a check. Good, 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 good. Don't blame me if it's not going to work, but I like spontaneous things. So let's see. No, you're supposed to be up there. That's why I took the camera.
Quickly to set up.
Oh,
You need to press some buttons first.
Okay.
So we make sure. You want to stand in front or on the side? Let's check.
You decide. You're the photographer. That looks like a good one.
You're happy with that?
I'm happy with that. And then you just press, right?
Exactly, this one.
Perfect. Okay. Everyone say NFT. Yay. One more time. Woohoo! Yay. And one for the audience. So thank you all so much, and please do come tomorrow for the second day of the CV Summit. We will start at 1 o'clock, run until 7, of course, the metaverse, the gallery, everything. But tomorrow it's very much into NFTs, DeFi, metaverse, and all of that. So please do join us, also our online viewers, tomorrow. See you at 1 p.m. Have a great aperivo, those of you who are here, and the VIP dinner, it starts at 8 for those of you who are invited to that. Thank you so much for today.